All right, we're live. I'm sorry. I'm late. I got caught up in the city. I literally got back 2 minutes ago, but we're here. We're live. Thank you, everybody, for being here. What a day. What a day in the global capital equity markets. Obviously, it wasn't really the funnest of days, given the way these equities have performed. I really have not looked too much at the markets since I left on the open, but as we are looking at them again, it's still pretty ugly. It is still pretty ugly. Microsoft right there got to 421. This is the worst day in 5 years for Microsoft. $400 billion of market cap has been deteriorated from the stock today. Why? I think it's because their Azure growth missed by 1 percentage point and their CapEx went up by 2 percentage points. And that's why the street is upset. That's the best reason I've gotten all day. But Microsoft right there, down about 11%. SoFi, down 1.2%. Meta, on the other hand, having one of the best days it's had in a long time. That's up 10% right there, trying to go for 740 at the close. Zeta's down 4%. Iren's down 5%. Salesforce down 6%. S&P 500. Wait, we're actually, hold on, that's not too bad for the S&P. You would think the S&P would be down 1% like it was. It was down 1 point. We were at 684 when I left on the open. We're at 693. All right, so obviously it's not all horrible. You're getting a little bit of a rebound right there. I really thought we were going to see the S&P a lot lower than what it is right now. Robinhood getting a little recovery at 98. It fell all the way down to those levels. Palantir as well fell to 147. That's at 151. You're getting some green candles right at the close across the board and on Microsoft itself. Look at that, 429 on some of these green candles. Not amazing, but definitely a little bit better than what it was at the worst of today. Celestica was at 285 right now at 299. Even SoFi, 2405 now at 2431. That one's catching a little bit of a bid. And then PayPal right there, 5307. That's still down 2% on the day. So why did this all happen today? I still think it's a bit of a mystery. I don't think we fully understand. In the morning, we chalked it up to oil prices being at their highest levels in terms of the percentage intraday gain since August 2024, but now oil prices are not as high as we thought they were. Yes, I did see this clip. Trump said he will announce the new Fed chair next week. I mean, hopefully that's good for the markets, but that will be something that the markets have to interpret. Gold and silver, incredibly volatile. You think they were pumping maybe on oil, but if oil's not the reason, then maybe it's the Iran headlines of Trump planning to potentially strike Iran. That could be something, but then again, is that going to happen? We don't know. Gold and silver right there. Gold up 2% of the day, falling from 5,600 to 5,388, and then silver falling from basically 121 to 116.90, 117 right there. Still pretty incredible for silver and gold as they continue their momentous run. Now, we had a bunch of headlines that have happened over the past couple of hours, which are really interesting. First of all, the U.S. Senate rejected a bill to keep the government open in a 45 to 55 vote, with another government shutdown now just 2 days away. Now, although the vote has been rejected, Trump was in a cabinet meeting and he said that he's making good progress with the Democrats on being able to keep the government open. He said he doesn't want to shut down. He says the Democrats probably don't want to shut down. So although there might be a small shutdown at Saturday at midnight, I don't think it's going to last for a long time, which is why I don't think the meltdown that we've seen today across the market is necessarily rooted in a shutdown. Seems like there's a different reason. Not sure exactly what that reason necessarily is. Bitcoin as well. We left, it was at 84. Where is it at right now? Or are we at least at 85? No, we are barely above 84. Wow, we got to 83, 2000. Obviously, that probably hurt MicroStrategy and BMNR. MicroStrategy down 11% on the day. BMNR down 11% on the day. So both of these taking it on the chin as crypto gets disrespected. NVIDIA going a little green at the close. So is Google. Meta, again, this was the big winner today. Meta and IBM having some momentum. Meta right there at 740. I do not know for the life of me why ServiceNow is down 11% on the day. Salesforce, Adobe, obviously Palantir got hit with the SaaS sell-off. A lot of it seems to be coming from fears around Microsoft's revenue guidance versus their CapEx. Microsoft right there at 430. I don't know if enough of those fears are justified. But yes, Microsoft closing above 430 would be nice to see. What did people do today? Did we buy? Did we sell? Did you take advantage of anything? I did not buy any dips. I did not sell anything either. Again, Microsoft was very tempting, but trying to get a little bit more of an understanding of what exactly is going on with Microsoft. We have Apple earnings after the bell. It's going to be a big one. 259 right there on Apple. I'll put the Apple pumper dump in the chat. We also have Sandisk and Western Digital. Sandisk, of course, 531, basically all-time highs. And Western Digital at 277. Thomas says, I nibbled at some 4. Limey said, I got some Goog, bought Zeta, ETH. Marcus says, I sold Iren at 61. That was a good sell. Not too bad. Ryan said, I bought Hood. June says, you bought more USAR. Apparently, the reporting from Reuters around this rare earth stuff, I mean, there's a lot of people today that said it was absolute garbage, but nonetheless, the stock still reacted. So maybe this is a Bible dip as some of those rare earth stocks will recover, but those ones still took a pretty big beating today. The other big piece of news today, which is just absolutely crazy, which before I give you that news, just take a listen to this stat real quick. This is the biggest intraday decline for Microsoft, 441 billion. It's the worst since NVIDIA lost 600 billion during DeepSeek. So this is the largest amount of market cap that a large tech company has lost in a day since DeepSeek. I mean, we all lived through that just happening today for 38.2% Azure growth versus 41%. I mean, I get it. A couple of percentage points matter, but my goodness, 400 billion. By the way, that wasn't retail. There's no way in hell that was retail. That had to be some level of structural selling from the institutions that wanted out of that story. But that wasn't even the craziest headline. The craziest headline today is that XAI is reportedly in conversations with SpaceX. There's something similar between XAI and SpaceX. Oh yeah, Elon Musk created both of them to go public together and merge, aka SpaceX would be buying XAI and then going public together as one entity. I think this makes a lot of sense for a simple reason. I don't think XAI is making any money. I don't think they're profitable. I don't think they have the users. Their Grok is obviously losing to Gemini, GPT, Anthropic. I mean, really, what is the value of XAI outside of the AI they can provide to Optimus, to Tesla, and to the Musk enterprise? I don't think the standalone app of Grok really is that meaningful. Also, SpaceX needs to justify a $1.5 trillion valuation. I think they're only doing about 15 billion in revenue. Well, if you acquire an entire AI company and merge them together, I think the SpaceX IPO starts to look a lot more justified in terms of the valuation that it could get. So to be honest, I think this makes a lot of sense. Elon has not confirmed or denied this, but if this were to happen, this would be a big win for XAI private investors. And obviously it would be a big win as well for people that want to invest in the SpaceX IPO when they go public. Here's a little bit of coverage on that as well. And then we got the close in about 2 minutes.
Currently the world's most valuable private company at an $800 billion valuation heads toward public markets. Now, what's being discussed is a share swap. XAI shareholders would take SpaceX stock. Reuters reporting that 2 new Nevada entities were set up last week as potential transaction vehicles with ties to SpaceX and its CFO. Now, there's no signed deal, no disclosed price tag, and the terms are reportedly still fluid. It comes as XAI, which just this month closed around valuing it at $230 billion, is spending aggressively on compute, including its Colossus data center build. Musk has pitched the long game here as AI in space.
Again, this would make a lot of sense. You think about data centers in space, all that stuff, that would also really make sense. I'll put the Apple pump or dump poll in the chat. Let's get some real quick coverage on Apple from Dan Ives, and we will get those earnings. Actually, Apple to get a 420. So we actually have some time. So we'll get the memory stocks first, and then we'll get Apple in about 15 minutes. Let me share that real quick right here.
Wait for those. You know, we may
look, and obviously, Alex, you know, we've talked about it a ton. It comes down to like the view, like they're watching AI from the stands. They're not on the field, right? And I think our view is, and we've talked about it, the last few years have been clearly disappointing when it comes to AI, but you look at Google as a key partnership. You look now, new blood coming in from the outside. This is going to be a different DNA in Cupertino. And I believe, look, iPhone alone, you know, we think we're going to be up double digit, but it all comes down to starting in March this year, then WWDC, monetizing on AI, and the biggest install base in the world. It all starts tonight. Look, I would say, like, there are important conference calls. Tonight for Cook, this is, I think it's a seminal moment. This is because he has to lay the groundwork for investors that are so disappointing, feeling like Michael J. Fox, Back to the Future, and they're not talking about AI. Show what the path is this year.
Are they sitting in the stands on the 50-yard line, or are they in the nosebleeds? Like, where have they progressed from all the way up top to down towards the field?
Last year at WWDC, nosebleeds. Now I feel, you know, kind of 40-yard line, maybe 30, 40 rows up. They're starting to make their move, but they got to look, time. There's a window, and this is a window for Cook and Cupertino.
I agree. This is supposed to be Apple's best earnings in 4 years. So we got to see what Tim Cook can deliver. Again, I think we get those at 4:30 actually. So we have some time before Apple. Until that, let me know who owns Sandisk and Western Digital. These, I think, are the biggest names that have earnings. Obviously, we got Visa. That's up 1.2%. Deckers, consumer brand. KLAC, that's a semiconductor name. That's up 4%. Again, not a horrible close. I mean, I know it's an ugly day, but look at the S&P. I mean, it's at 694. It's almost like today never even happened. We went from 684 to 694. I know software still got smacked. Crypto still got smacked, but we ended flat, guys. In the next 30 seconds, we're going to all this hoopla for ending flat on 694 S&P. Microsoft's going to end at what? Above 430? 432. 421 to 432. The algos are obviously coming in at the very end of the day. It could be a head fake. We had a middle of the day pump that also got rejected, and then seems like towards the end of the day we're pumping again. But a lot of these stocks are still going to end down in the red, but it's not going to be hopefully as bad as it was at the market open. All right, here we go. Thursday, January 29th. Thank you everybody for being here. Apple earnings. The stock market is now closed. All right, we are done for the day. What a day it has been. This is your heat map. We actually ended green in a lot of places outside of MSFT. Amazon went flat. Tesla, I didn't even look at Tesla, took a 3% hit. All of software, you can see that right there, just destroyed today. But a little bit of a bounce from where it was at the lows. IBM was up 4%. JP Morgan, Visa were up. Berkshire was up. Netflix was down 2%. And then Microsoft down 10%. Worst day for Microsoft since March of 2020. Kind of crazy that today was the day for that to happen. But that's what happened. S&P ended at 694.05. Robinhood, is it pumping after hours? Why is Robinhood pumping after hours? That's a pretty big move, 3.5%. 101 to 104. The stock was at 99. I'll see if there's a headline on Hood. U.S. weighs tapping Robinhood for Trump's accounts. I mean, we all knew that was going to happen, right? Let's freaking go, baby. We all knew that was going to happen. We all knew Vlad was going to make sure he got close enough with Donnie T to make that happen. Look at that. What a day. This stock got demolished over the past week. Talk about a good headline. 105.44, up 4%. I mean, if they were to get control over, they probably wouldn't get all the Trump accounts, but a lot of Trump accounts. That's a lot of people. By the way, those would be free assets. Those would be taxpayer-funded $1,000 accounts that would be going into Robinhood's custodian of the Trump accounts. So that would be pretty good. Vlad, by the way, also tweeted about these Trump accounts coming. So maybe that was a little bit of a sign that this is happening. That would be a big deal. That would be a big deal if that ends up playing out. All right, not too bad. Not too bad for Hoodie. Nice headline to get after hours. Earnings, let's see what we've got. Again, Apple is going to take some time. Robinhood right there up about 2.78%. S&P 500, that's up a little bit after hours. Microsoft flat. Sandisk and Western Digital. I don't even think I remember covering these companies last year. That's how much they weren't really talked about. So today, I think is my first time I'm even going to be looking at what these companies are putting up. And we're going to see if they can execute. Let's get the expectations for these companies. Again, let me know in the chat if you own any of these, including Visa, KLAC, and Deckers. Also, Waymo's robotaxi hit a kid. So Google's now being investigated for that. That's not the best for Waymo. Sandisk Street wants 354 of EPS and 2.99 billion of revenue. And then Western Digital Street wants 193 of EPS and 2.94 billion of revenue. There is another headline that Amazon could invest up to 50 billion in OpenAI in the coming weeks. We talked about something similar to that headline last night, but it had to do with Amazon, Microsoft, and NVIDIA. This one by Bloomberg, much more specific, that Amazon in particular is trying to invest a good chunk of money in OpenAI. And so, I mean, maybe it makes sense if OpenAI is obviously going to buy a lot of AWS cloud compute from Amazon. Decent chunk of you saying you own Sandisk. I don't see a ton of people. It's definitely not as popular as Micron. Some KLACs and then a little bit of Visa. All right, Visa earnings, they are out. EPS 317 versus 314. That's a beat by 3 cents. Revenue 10.9 versus 10.6. That's a beat. Total Visa processed transactions 69.4 versus 69.7. So Visa missed on processed transactions, but they beat on the top and the bottom, which is good. That's what you want to see for Visa. That stock had a little bit of a move in the close, or right going into the close, but nothing on a reaction to those earnings. Visa right there up about 0.26%. Again, for those that are asking for Hood, Robinhood is being weighed potentially to host all the Trump accounts. Again, I don't think they're going to get all like 3.5 million accounts per year, because like if your parent has a Schwab account, then they might just want their kid to have a Schwab Trump account, for example. But if your parent doesn't even have an investment account, which there's a lot of people that don't have investment accounts, they just have their 401k, and they get this opportunity to invest for their kids, and they are recommended this little company called Robinhood where they can set up the investment account. First of all, the parent might set up an account at Robinhood, which is good, but also that kid for the next 18 years will have their money, or actually I think it's 30 years, on Hood. Like that's a big, we analyzed this in May of last year. This was a big deal. A lot of people said Robinhood wasn't going to be in the running for this. I was like, are you kidding me? They literally designed the UI and showed it off before the thing was even announced. So it makes sense that this is happening right here. Robinhood 105, that's up 3.8% after hours. Sandisk and Western, I still don't have their numbers yet. Deckers, I don't have their numbers yet either. Visa's now down 1.3%. Decker's up 4%. Decker's up 5%. Let's see those numbers. These are consumer. This is a consumer company. They sell boots, if I'm not wrong. Street wants 277 of EPS. We don't have the number yet. It looks like they beat. That's up 4%. Isn't SoFi doing that? I think SoFi might. Yeah, I think SoFi might allow that, just like Schwab and Fidelity will allow the Trump accounts. But if Robinhood is the go-to de facto platform for it, again, they're not going to get all the accounts, but if they get a good chunk of it and they get to keep those assets for 30 years, I mean, that's a big deal. So, we talked about this months ago, and it looks like that might end up happening for Hood. 107 on Deckers. That's up 8.3%. That's big. Western Digital is down 4% down. Don't have the numbers yet. Western Digital, let's see if that reverses. Sandisk is also, it's 1%, nothing too crazy, but that's down as well. Deckers beat on EPS by about $1, 333 versus 276. EPS is up 11% year over year. Revenue 1.9 billion versus 1.87. That's up 7% year over year. Deckers up 6%. Western Digital revenue 3.02 versus 2.96. That's a beat. EPS 213 versus 192. That's a beat. Third quarter revenue guiding 3.1 to 3.3 billion. I think that's a beat on guidance, but it is a beat on the top and the bottom. Now, remember, this stock, if I'm not wrong, year to date is up 50%. So the expectations are high. This is a good beat. It's not a crazy beat. I think on the call, if they say some good stuff like Seagate did, that could pump it even further. But it is a double beat, which is what you want to see. Western Digital right there trying to go green, up about 2%. KLAC, they get a double beat as well, and that stock is down 8%. EPS 885 versus 880. They beat by 1%. Revenue 3.2 versus 3.25. They beat by 1%. Revenue's up 7% year over year. EPS is up 8% year over year. The stock is down 7%. Sandisk is going higher. 8%. Oh my goodness. Micron's probably moving with it. Yep, Micron is moving with it. Up 1.6%. Sandisk 9%. Let's see the Sandisk numbers. Oh my God. We all knew this was going to happen. Like, we all knew this was going to happen. No, and I don't know how many people have the guts to buy the damn thing, but we all knew this was going to happen. EPS 620 versus 330 estimate. 100% beat on EPS. Q3 adjusted EPS, they're guiding for $14. Oh my friggin' goodness. Revenue of 4.8 billion. They're guiding for sequential growth of 1 billion quarter over quarter. Revenue, they beat by 12%, 3.02 versus 2.69. EPS is up 404% year over year. Revenue is up 61% year over year, 620 versus 354. That is the triple digit beat from Sandisk. Where is Micron? We know Micron is probably going to put up really good numbers too if Sandisk is. That's up to. I'm surprised Western. No, yeah, Western now is pumping. I think Western Digital is pumping even more on Sandisk's numbers than their own numbers. Western Digital right there, that's up 6% after hours. Sandisk is up 12%. Memory is the super cycle. I mean, it is what it is. And you can either be afraid to buy into that momentum, like myself, or you can sit back and just watch it go higher. There isn't a right or wrong answer. There's only the answer that people are comfortable with. But memory is in a super cycle. And the question becomes, when does that super cycle end? And if it's not ending anytime soon, these stocks are going higher. I mean, these stocks, it looks like, are going higher. 594 right there on Sandisk. That's up 9.3%. Again, these numbers, it's just hard to deny what they're saying right here. Even if you think it's cyclical, the cycle is not necessarily stopping now. It's not stopping now. I sold 1,000 shares of Sandisk at 300. Where is Sandisk? What, 530? So about to be 600. I mean, look, hopefully you bought them a lot lower than 300. It's tough. This is the market. And we all know memory's in a super cycle. We've all been talking about it for the past 2 weeks, but to still buy stocks, Sandisk was up 120% going into the print. Sandisk is now up 100 and almost 37%. Like, it's hard to buy a stock that's up 111%. But if they keep putting up the earnings growth, then the funny this is the only reason there's all this growth for Sandisk and Western Digital is because there's this whole GPU revolution going on called AI that is coming from NVIDIA. And the market is giving the benefit of all that to a Micron, Sandisk, and Western Digital, not NVIDIA. And quite frankly, maybe the forward earnings estimates is what that justifies. But it is incredible to see where the value is going. And right now, the value is going to these memory stocks.
Analysts got the numbers. Christina.
Well, Western Digital, for those that don't know, it's a hard disk drive storage firm. They store memory even without power. Their earnings per share coming in at $2.13, a beat on revenue of $3.02 billion. For gross margins for the quarter also beat 46.1, higher than the street estimates. It's the guide that we're seeing some strength, which we saw from competitor Seagate on Tuesday. Western Digital guiding 2.3 cents adjusted for EPS on revenues of 3.2. So both of those numbers are higher. The company putting in their release, quote, "We expect strong revenue growth and improved profitability driven by continued data center demand and by the adoption of high capacity drives." So again, a very strong guide, and also guide for gross margins higher than the street anticipated, which could be a reflection of higher selling prices of 47.5%. What's that?
Yeah, it's a big jump in Q3 guidance, although it shows you how far the stock has run, that we're only getting a maybe 2% move off of that. So we'll see. We were positioned for it, I guess.
Or you can say that's...
And they are moving a lot higher now because of Sandisk. Visa already reported they beat on the top and the bottom. Stocks down a little bit. Sandisk not stopping, 13%. Visa down 1.7. Deckers, by the way, I mean, Deckers actually has had the best earnings reaction, I think, all quarter. 15% on Deckers. Double beat. Looks like people, and this is a consumer brand. I mean, people are buying boots and tents and all that stuff. I guess people like to go camping. I don't know why people would go anywhere where there's no Wi-Fi, but for some reason they do. And that's enough to get Deckers to pump. Deckers, 20% EPS beat, 5% revenue beat. Apple's at 4:30. Apple's at 4:30. So we got 20 minutes until Apple. Sandisk 16% green. Oh yeah, Deckers owns Uggs as well. I forgot, which is also a very popular brand. Sandisk 625. Who owns this? Put in the chat. Who owns Deckers? Or not Deckers, Sandisk. I mean, this is getting kind of crazy, guys. This was the top performing stock in the S&P 500 last year, by the way, 560%. Now it's up more than 13x over the past year. I mean, did the crypto stuff pass? I don't think so. Someone can confirm it to me, but I don't think the crypto stuff passed. Julian said I did a 3 million swing right before. You bought it right before the earnings? And are you holding? And if you put 3 million in it, you're up 15% on the 3 mil. So congrats. Not too freaking bad. Let us know if you're holding or selling into this. I can imagine a lot of people definitely want to take profits into this. But dude, it's hard to sell these stocks on these earnings. They just beat earnings by 100%. They did what? I mean, Sandisk just had the best earnings since Micron. Micron just had the best earnings in December since NVIDIA. So the only stocks in the semiconductor ecosystem, Julian said he's holding. All right. Well, there you go. And it looks like it might go higher. The only stocks that have had the best earnings in the semiconductor ecosystem besides NVIDIA are the memory plays. Not AMD, not Broadcom, not Lam Research. It's all memory that's been able to hold on for this. Micron now up 4% after hours. I mean, this is incredible to see. 624. I mean, the market cap here is only 80 billion on Sandisk, by the way. PE's forward at 44. I know 44 is a little bit of an expensive PE, but if you're growing at 100%, people are willing to pay for that growth. I mean, people are willing to pay way more than a bigger 44 PE on companies that are not growing at 100%. In fact, people are willing to pay way more other multiples on companies that don't even have an E on their P, because they're not profitable. So, I mean, like when if someone were to say Sandisk is crazy expensive, it's like, it's not. There's a lot of momentum, which is a little scary to invest in for sure, but it's not crazy expensive per se. Western Digital, that one losing a lot of its pump. That's down 1%. Micron moving with it. 4.5%. Micron new all-time highs. There you go, 455. So Julian, you're up a cool 450K on that 3 million right here. And if they get on the call and they start saying some good stuff, I mean, this thing, here's the thing. If it dumps tomorrow, I'm sure there's going to be people ready to buy that dip because they just reported EPS growth of 100% and guided for even higher. So that would have to, I mean, there would have to be some fundamental disconnect for this thing to dump and for no one to be ready to buy the dip. The fact that Microsoft missed Azure cloud growth by 2% and lost $400 billion in market cap versus a Sandisk, which obviously is not the size of Microsoft, but like the growth they're putting up being rewarded for what they're rewarding and Microsoft being punished as much as they are, shows you how divergent this market has become. Market will pay for growth, but they need to see the growth. And if you don't get the growth, even if you're a phenomenal company like Microsoft, you get smacked. Even though Microsoft now moving a little bit up after hours. S&P 500 trying to go green. Apple, we got a couple minutes until we get Apple. Palantir down a little bit after hours. Yes, we talked about the Amazon investing $50 billion in OpenAI. That's still a rumor. We don't know if it's going to happen. I mean, I think it's bullish, but it's also like, dude, $50 billion? Are you kidding me? Like, does Amazon even have $50 billion to just willy-nilly give to OpenAI? I would imagine they're part of a $50 billion round, not they literally want to give $50 billion. And if they literally want to give $50 billion, I hope that Jassy is going to get that money back. Because part of the reason Microsoft was probably down today was because the RPO included so much of OpenAI, which the street is not happy about. UNH after hours, that's down 0.5%. That's down 0.5% as well. I thought of buying Sandisk at 183 just a couple months ago. Yeah, and you probably struggled to buy it because at that time it was up 70%, right? It just goes to show you, like, bottom fishing for stocks that are dead and have multiples depressed in this market, PayPal, Salesforce, Adobe, etc., is not really the way people are making money. The way people are making money is leaning into the strength and the momentum and buying companies that are putting up massive earnings growth, even if the narrative is that these companies are cyclical, but the cyclicality is in tune with the thematic of AI. Central to AI is memory. And I think that's why we're seeing this broad-based momentum. Here's some more coverage here on Sandisk.
Because they're substantially higher for the quarter. And this is Sandisk. They do a flash storage memory. And so for EPS for Q2, it came in at $6.20. The street was anticipating $3.62. So a drastic beat there on revenues of $3.03 billion, so a modest beat. When we're talking about the Q3 guide, this company posted a Q3 EPS of $12 to $14. The street was anticipating $5.11. So there's no one. It's, I guess, explanatory.
That's the other big reason. Like, forget Sandisk, forget memory. If the street, Wall Street, like this big, mythical, important entity called Wall Street, thinks you're going to do $5, that has the smartest quants in the world, like, oh yeah, we think Sandisk can do $5, and you do almost triple that, your stock's going higher. It's just that simple. You could be selling ice cream, like it's memories, chips, ice cream. Like, if you beat Wall Street by 3x, you're going up.
or why the stock is jumping 16% when these numbers are so much higher than street estimates. For the Q3 revenue guide, $4.4 to $4.8 billion, much higher than the street anticipated at roughly $3 billion. And then the gross margins, they're anticipating gross margins to be anywhere between 65 to 67%, which is much higher than a lot of other AI infrastructure names in this space. And data center revenue, one last point, climbed 64% sequentially. That's from quarter to quarter, and they're only halfway through the year. This is a company that split from Western Digital just last February, guys.
I was just looking at that actually in terms of how much market cap you have in Sandisk plus Western Digital relative to just Western Digital a year ago. It's just phenomenal. It's just like many multiples. So who knows? Maybe Western Digital wishes to hang on to Sandisk. But this is kind of remarkable in the sense, Christina, that somebody's paying for this, right? And so that becomes the concern, is this extreme scarcity and this frenzy to actually get product. It's probably going to come out of somebody else's margins.
Yeah, and most often for Sandisk, the exposure is to original equipment manufacturers. So think Dell, Lenovo, et cetera. And many of those companies did already complain that the memory costs are hurting them and that we're going to start to see the pain just in the coming months or so. It's not the same for a company like Sandisk that is able to maintain margins of 65 to 67%. But yes, to your point, somebody is paying further down the supply chain. We have to keep that in mind when we're factoring in all of the other OEMs in this world. And when even you and I go buy technology products like a camera or a computer.
Christina, thanks. We should know. I mean, my first reaction was I took a look at Dell.
Yeah.
Oh my. All right. So the market definitely got hit today. Got a little recovery. These memory stocks are going to the moon. Robinhood potentially getting all the Trump accounts. That's up 3%. If Apple can give us a good earnings, who's long Apple? Put in the chat. Also, what did you guys say? Pump or dump on Apple? Who's long the Apple? 60% pump, 40% dump on Apple. Who's buying it right now as a trade? You got 9 minutes. Obviously, the Gemini series stuff, that's super important. iPhone growth, iPhone 17, I think was way better than the past 3 years. That's super important. What else is important? AirPod, watch, iPad, not that important. Oh, China revenues are going to be important of all those products along with the MacBook. I mean, that matters. That matters. Davis says buy 1,000 shares. Dude, you guys know what Davis texted me? He was like, hey, when you pick me up from the airport, you better have flowers and chocolate. I'm like, bro, you are gay. Like, I do it as a joke. You're actually like, the question is, what flowers and chocolate do I get him? Like that. Anyway, Apple, are we going up or down? Are we going up or down? It was 280. That's correct. It was 280. We're at 257. Now, Deckers, by the way, 15%. This one's still moving. Let me see if I can get some more specifics on Sandisk and Deckers. I think these were the most important earnings. I mean, we had Visa. They had double beat, but nothing too crazy there. What's the short float on Sandisk as well? Let's find that out. Because this could also just be some squeezing after hours. Short float is 5%. Okay, that's not enough for a squeeze. Let's try Western Digital. 10%. Western might actually end up being more of a beneficiary of that. Caterpillar earnings were in the morning. They had good earnings. Chris is not here yet. Chris will be here in like an hour, and then I'll have him hop on the show and we can talk stocks. That'll be probably in the middle of Apple's call. To be honest, Apple's call is pretty boring, but we'll get through it and see what they have to say. I don't think the stock's gonna move on the call. The stock's gonna move on headline results on the call. Cook just has to give a good explanation of why they haven't spent so much capex and how they're going to still benefit off the distribution they have for AI with Siri. They also, Reuters reported today, Apple's planning to give this Gemini Siri away for free. So it's not like they're going to monetize it immediately. And I think that makes sense. They probably shouldn't charge for it immediately, but eventually they will. And how do you get people hooked on enough to pay it? US has investigated that WhatsApp chats aren't private. Is that affecting Meta after hours? Meta down 1% after hours. US investigating claims that WhatsApp chats aren't private. Did anyone really think WhatsApp was private? Did anyone really think, you think Zucks is guiding 33% revenue growth by not reading your messages? Come on now. Come on now. I don't think that's going to hurt Meta. Everyone's basically given up their privacy anyway. But I mean, theoretically, that could hurt the stock price. 731, that's down 1% right there. Apple, still waiting for those earnings. Let me pull up the expectations on Apple. Again, we had Sandisk, Micron still moving after hours on Sandisk. I mean, it doesn't look like Sandisk is stopping. Micron getting a little bit of a breather right there, 446. Even Sandisk, 628 to 612, still up 13%. But those numbers continue to be the best numbers we've seen since NVIDIA. Again, with all this growth, whether it's in cloud, advertising, or memory, I don't see how NVIDIA is not above $200 after earnings at minimum. Like, I mean, I understand that there's a memory shortage and they have the pricing power, all this stuff, but the only reason there is this much demand is because of data centers, aka GPUs. So I feel like if you missed Micron, you missed Sandisk, like at least if you have NVIDIA, and even if you don't have NVIDIA, even buying in at 192, I don't think that's crazy. And I hope I don't have to eat my words after earnings, because every time they've given a good earnings for the past 4 quarters, the stock has got hit. But at some point, I think things change. Western Digital, does that go red? Oh, that just went down 5%. They might have said something. I'll see if I can find something. Hopefully that doesn't happen to Sandisk. USA Rare Earth Director just bought 100,000 shares at 21.43. That stock's probably up on this. That stock is up 2.72%. All right, got an insider buy at one of the big rare earth stocks just now, 21.43, 100,000 shares. That's probably the director saying that that Reuters article was nonsense that came out yesterday about the rare earth names not having enough funding from the White House. That stock up 2.63% after hours. What do you think about SoFi tomorrow? I just hope it goes up. I really do. There's no reason for the price to be at these levels. You know, we can get into the fundamental arguments, but the stock is $3 below where they diluted at. Some bank bought $1.5 billion worth of this stock a while ago, like a month ago, and they don't deserve to be at that price, this much below this price. So I think Noda's going to crush it. Hopefully they don't have conservative guidance, and I think SoFi goes long. The good thing is, if SoFi does have a crappy earnings, what is this thing going to $19? Like, I think a lot of it's been priced in, hopefully. So maybe max pain is 22, but I think upside should be closer to 29. I don't know if we get that tomorrow. I'd be happy if we get 27 tomorrow, but tomorrow morning we'll be live to see what happens. What's your average on SoFi? 27. I'm late on SoFi, but I do think they should have a decent earnings. Zeta right there, that's up a little bit after hours. Tesla moving a little bit after hours, 418. Netflix, 82.98. HIMS right there was up 5% during the day. Enphase got hit with First Solar. Those got hit as well. CME Group increases COPEX copper futures margins by 20%. Okay, it is beginning the increasing of margin. They've already done this for silver. Looks like that's starting for copper, which is actually bullish copper because it means there's a lot of people that are buying into it. However, 3 minutes until Apple, I will say, let me just show you guys something on my phone real quick. This is where I am actually kind of scared about copper. This was during the day, okay? This is the silver chart. Take a nice look at that chart. You see how the thing goes up and down and then comes back up? This was the COPEX chart at the same exact time I took the screenshot. It almost looks identical. I really think that copper is just acting like a proxy to silver, even though there is a real fundamental thesis around copper shortages and demand. And until the charts diverge, I'm genuinely a little scared about having a fundamental thesis on copper if it's just going to act like a proxy to silver. I mean, at that point, you're at the behest of silver going up. So I do think people need to be a little, forget copper, any precious metal. It's like gold and silver are Bitcoin and Ethereum. And if those tap out, the other ones better have their fundamentals come into place and start not tapping out. Because if they do, then it's just following gold. Maybe gold and silver don't tap out, but my goodness, they've been on a crazy run. Like, would anyone be surprised if they tapped out? I don't think so. So I think that is the risk right there with some of these other precious metals. S&P 500 down a little bit. Palantir down a little bit after hours. Robinhood still up 2.39%. Is this your UPS scarf? you know, I went into a meeting in New York today. I forgot my jacket. I had to walk like 20 minutes. And the only thing I had in my car to keep me a little bit less cold was this scarf. So the scarf helped me today. All right, here we go. Apple. It is time. Let's see what we can get from Apple. We got 2 minutes. 2 minutes until we see Apple. It's 4:29. Let's see Apple right here. It's already going down a little bit. 45 seconds. All right, here we go. It's either going up or it's either going down. It's either going up or it's going down. That's why you guys come to the stream, for that type of analysis. It's either going up or it's going down. Watch me be wrong and it does nothing. That's what's going to happen. Here we go. 20 seconds. $3.8 trillion on the line for Apple. Let's see what we've got. Let's take this one higher. It'll help the market. Let's see. 430. We're green. 1.94, 2.3. Can we hold it? 2.27. Now it's going back down a little bit, trying to hold 2.3, 2.4, 2.789, 2.64. Apple, let's see a double beat. Apple. It's holding 2%. Usually I don't trust these candles until they're at least showing you 3% up or down. Until then, it could easily switch. Trying to get the results. Apple. Beat and a beat. Wow. This is a big beat. Whoa. 284 EPS versus 268. First quarter revenue, Street wanted $138 billion. They came at $144 billion. It's a $6 billion beat on revenue. When's the last time Apple did that? My goodness. EPS almost 20-cent beat. Oh, and here's the big one. Street wanted $21 billion in China. Apple gave you $25.3 billion. That's what I'm talking about, baby. This market needed that today. Wow. Year-over-year EPS 18% growth. Revenue 15%. Street thought it would come in at 12%, 263 on Apple. We have not seen 15% growth on Apple, I think, in almost 3 years. It's been a while, and it looks like we got that just now. Let's get some coverage on this. My goodness, what a quarter. I mean, even if the stock goes red, this is what you needed from Apple. And boy, did they deliver here.
The numbers, as we see the stock popping up a little bit. EPS was a beat at $2.84. Street wanted to see $2.67. Revenues up 16%. Top line revenue, $143.76 billion. Street wanted to see $138.48 billion. iPhone revenues, as you just were talking about, up 23% to $85.27 billion. Street was expecting just $78.65 billion. Services revenue pretty much in line here, $30.01 billion compared to the $30.07 billion expected. That is up 14%. And by the way, I caught up with Apple CEO Tim Cook on these results because China was just such a blowout quarter, up 38%, $25.53 billion. Here's what Cook told me about that surge in China sales. He said, quote, "I think it's a result of the product resonating with the Chinese in a huge way. We just saw a lift that was much greater than we thought we would see, and so we were surprised, but it's very product driven. They love the iPhone." That backs up a lot of what we've been seeing in the fall, just all this momentum out there. Part of it due to government subsidies out there in China, also people just gravitating towards those new designs and new models of the iPhone 17. I also talked to Cook about Gemini and that new partnership for artificial intelligence for the Apple Intelligence system that they're expecting to launch soon. And about the privacy angle here, because using Google's technology as opposed to their own and how that all plays in, here's what Cook told me about that. He said, we're not changing our privacy rules. We still have the same architecture that we announced before, which is on-device plus private cloud compute. So if you type something or you use your voice to ask something, that can't be done on the device. It goes to the cloud. And there's lots of both of those kinds of queries. So basically saying it's going to maintain that same privacy promise despite this partnership with Google's Gemini system. We should see that hit pretty soon here. And then finally, we're expecting on the call at 5, Cook saying they're going to address those memory prices that have been talked about on the street so much, as surge in memory prices due to AI demand and how that's impacting margins and prices here at Apple. That's going to happen at the call along with guidance at 5 p.m., guys.
All right, Steve, keep us posted. Steve Kovac, thank you.
Thank you.
Gil Loria, Patrick Moorhead, want to go back to you. A lot to digest here. Pat.
Guys, this is a great quarter. This was a great quarter. I don't know how the stock is going to interpret it. I mean, originally it was pretty bullish. We got to 268, now at 263. But the stock aside, we needed a quarter like this, given the momentum to the downside today. And eventually, you know, the market catches up to the quarter. Now, also, Apple trades at a premium. It's always traded at a premium. So one could argue that this quarter is justifying the premium that Apple trades at, because it's like the first real growth quarter they've had in a long time. But still, we needed this type of growth. And it looks like Apple's giving it. Also, I mean, again, Apple is one of the most important companies on the planet. And for the past literally 3 years, their earnings have been lackluster. There's barely been any iPhone growth. I mean, China was abysmal. They by the way, they delivered this quarter with a $1.4 billion tariff headwind. And they had a couple $1 billion last quarter as well that they had to deal with. So, I mean, they've had to deal with a lot of stuff to get these numbers. And they definitely deserve some credit on that. Here's the specifics on Apple. 85 versus 78 billion on the iPhone. 8 billion versus 8.9 on the Mac. 8.6 versus 8.13 on iPad. Wearables, 11.4 versus 12. Services, 30. Gross margin, they increased it by a little bit, 48.2 versus 47.5. So really, the outperformance was the iPhone. Without that iPhone, you know, this company doesn't beat, but that iPhone continues to be what people care about. Apple returned almost 32 billion to shareholders through buybacks and dividends. Board declared a 26-cent cash dividend payable February 12th. 15% growth for a 34 PE. You know, it's a fair point. A lot of people are wondering, why would you pay that type of growth for that type of PE? I mean, you could buy Sandisk, which is doing 100% growth for 44 PE. It's kind of a no-brainer for Sandisk, right? But Apple gets the Apple premium, which is that this is a company that consistently compounds. They have 100 billion in cash. They're not going out of business ever. They're not cyclical. You know, their products are intertwined with billions of people across the planet. So there is a reason people pay that extenuated premium. And I think that's why you're seeing that reflect in the stock. But the fact that the earnings growth is finally somewhat catching up to the PE is good to see. Sandisk right there, that's up 12.5. Micron's up 2. Western Digital, for some reason, went down. Now it's flat. But it was down about 5%. The market needed that. Otherwise, we were red tomorrow 100%. Yeah, I agree. If Apple missed, it would have been a little ugly. Apple's call, I believe, is, let me make sure. Yeah, in about 20 minutes. We'll get 20 minutes on Apple, and we'll see what they've got. I think the Sandisk call is on right now. Do people want to listen to that for 20 minutes? Yeah, we could for the next 20 minutes if people want to listen to the Sandisk call. Or we can keep looking at some of these results. We'll have Apple on in a bit. Let's get a little bit more coverage on Apple, and we'll keep going from there.
Patrick, what's your initial?
Stunned particularly by the China numbers, and that was the biggest swing on the stock going in, but they absolutely crushed the quarter. The most important thing is going to be on that guide. How do memory price increases factor into gross margins? What is the nature of the deal they did with Google and its potential impact?
Okay, let's tune into the Sandisk thing for a little bit. I think it's going to be kind of boring. Let's hear a couple minutes of it, and then we'll see.
Enforce performance leadership. Together, these actions reflect our continued focus on driving demand through brand, innovation, and disciplined go-to-market execution, reinforcing Sandisk's leadership across gaming, creator, and everyday consumer segments. These wins across our end market.
I'm already bored. We'll get the highlights from the Sandisk call, dude. It's memory. There's a shortage and they have pricing power. Like that's like, there's not much more you need to know, to be honest. I mean, like a lot of these calls are not that interesting, to be honest. So Apple, hopefully we get a little bit more. Apple's gonna be boring too, but maybe Apple's gonna be better. Yeah, we're not gonna get honestly, Sandisk Q&A is what matters, and we're not gonna get that for another 45 minutes. So during the Apple call, I'll try to put that in the chat, the answers for it. But realistically, them reading the results is not going to matter. By the way, get ready for Apple. Apple's call for 20 minutes. They just read results. It's really boring. But once you get to the Q&A, there'll be some good stuff. And I'll try to get the Q&A from Sandisk in a little bit as well. Apple CEO Tim Cook said wearables growth was held back by supply constraints with AirPods Pro limited in Q1 and the segment otherwise poised to grow. Cook also said that iPhone 17 saw double-digit Android switcher growth in China. Wow. Apple's install base topped 2.5 billion devices. I think that was at like 2.2 last quarter. And a Google-powered Siri upgrade is coming later this year. I mean, you know, there are people that have told me that Google's AI is why people will leave the iPhone. I have respectfully disagreed with them for a long time, and I continue to respectfully disagree. Like, I don't really think people will leave the Apple ecosystem, but it will be a very small percentage of people, like minuscule compared to the overall user base they have. And if Apple actually nails this partnership with Google and Gemini becomes legit integrated with Siri, there will be never need to be a reason to leave the iPhone ever. So I think some of those fears might be a bit overblown. Try to get some other updates from Apple here. Again, massive EPS beat for Apple and a huge revenue beat as well. My aunt just called and said, "This is why you own Apple." Bro, that's crazy. Well, it's good. Your aunt is letting you remember why she probably bought Apple 30 years ago. Dude, put in the chat how long you've owned Apple for. I think that's the coolest thing about this stock. It's like, this is the one stock that has been around for so long and people have just like held it forever. Even if it's a small portion of their stake, they've just held on to some of their Apple. And it's obviously returned very well for a lot of people. S&P 500, they're going up a little bit. S&P, I think, should be up a little bit more. Maybe if Apple can get up another 1%, that would help. My dad owned it since the 90s. Incredible. 2005, 2014, 2011, 15 years, 2011, 18 years, 10 years, 2018, I used to work for them. Dude, the stock Buffett bought in 2016. So if you got some stock-based comp in 2018 and you're holding on, it's done well. It's done very, very well. Apple's calls in 20 minutes. Apple's calls in 20 minutes. Let me see if I can get some more details on Apple. Wow, Apple has 145 billion now in cash. My goodness, dude. Cash reserves of 145 billion.
Is so compelling and requires new hardware that it drives that. And the other way is if there's a foldable iPhone that can be in that 1,500 to 2,000 ASP range to raise the overall ASP. With absence of those two things, we would be looking at down results in 6 to 12 months. And that's what investors are going to start thinking about as they celebrate a good quarter today.
Maybe I'm reading too much into this, but it really stood out to me that in Steve Kovac's conversation with Tim Cook, that Tim sort of deferred any commentary on surging memory prices until the conference call. We are, this is a night where we saw Sandisk blow out their numbers for the quarter as well as the guidance for the current quarter. A night where Western Digital also came in with better than expected numbers. So memory prices are front and center here, Patrick. And I'm wondering how much you think what we're seeing in the memory world will actually translate into Apple and how much price they're going to be able to pass on to the consumer. Because for every demand, every incremental demand for an AI application, that's demand for memory effectively.
That's exactly right. There's fungibility between whether it's data center, HBM, DDR5 memory, or memory that goes into a smartphone. And even Apple, who is exceptional at supply chain, Tim Cook is one of the best up there. They are being levered by their suppliers right now from a pricing standpoint. Not only are they going from the number 2 at TSMC being dethroned by NVIDIA, but they're going from 6-month or 1-month contracts on memory into 3 months. And I think the reason this conversation is being deferred is because it's complicated, okay? There's going to be some storytelling here, and I don't think that is a positive sign. Otherwise, it would have been in the press release, or Tim would have shared that with Steve.
Gil, for as much.
I mean, look, on the call, Cook's going to have to really explain this broader Siri vision with AI. Apple, it's barely holding on right now to the gains, but I think that's going to be really important. Again, Apple is not a really volatile stock on earnings. The average implied move is like 2 to 3%. So I think a lot of people thought maybe a blowout quarter would actually get it to move 5-6%. And yeah, it was a blowout quarter, but still not enough to get to those levels. Now, the stock was at 280 to start the year, so it's not like it hasn't been at these levels. But there'll be random days on like a random Thursday where Apple just gaps up. I mean, it's happened over and over again. So maybe it's not today, but these results are pretty damn important. Google, that's flat after hours. Sandisk, are we still rolling? A little relaxed, but above $600. That's 12%. And Micron's at 443. All right, so let me ask people a question. Who's buying the memory names now that you've seen Sandisk's record quarter and Western Digital's incredible quarter? Because for the past 3 quarters, the problem has been amazing earnings, but I can't buy because it's up too much. And I think literally today, once again, same thing, amazing earnings, but I can't buy it because it's up too much. Who's changing their mind? Who's saying, you know what, screw it, I'm buying it? Let me do a poll right here in the chat. I'm in. I don't care that it's up 13x. I'm in. I'm buying more. No. See, this was the exact same question I asked in December after Micron earnings, and everyone said the same thing. They're like, I can't do it. And I get it. So I feel the same. But like, goodness, imagine we just had held our nose and just bought the damn memory stocks. Yeah, 70-30, no. I get it. It's tough, dude. Hard-earned money, it's tough. This market can be ruthless. Same for silver. Yeah, same for silver. That's a good, fair point. Same for gold. You got to stick to a formula. I 1000% agree with that. If you're not the type of investor to buy a stock that's up 13x, even if it looks cheap, if you have your own system, you got to stick to your system. Otherwise, you'll drive yourself crazy. I mean, if I tried to chase every small cap that's out there, it would be tough. Because whoever chased rich tech robotics over the past 24 hours, not happy. Stock's down 20% today. It was up 45% on Thursday. How many people bought it at $5.45 that are now holding a $1.45 bag on this company? It's not fun. I'm not saying that's happening to the memory names. I'm just saying, if it could happen, it becomes very scary to be held holding back. Oklo was at 95 yesterday. It's at 86. Some of these names, they can just reverse on you so quickly. I think that's why a lot of people were scared to buy Microsoft today, including myself, even though this one, I feel like you could buy and not stress too much about it. 436, that one's moving a little bit more after hours. Can you talk about HUD again? I know it had an ugly day. I think a lot of that had to do with crypto. The reason it's up to the same price it was at yesterday at 103, so the 2% move I think is irrelevant. The good reason is why it's moving, which is the Trump accounts and HUD potentially having a bunch of them. But I don't know if that's going to be enough to pump the stock like heavy, you know? I think this one is a lot more structural with crypto. Vlad was talking about the Trump accounts yesterday as well. He was also talking about private companies. Here's a clip of him yesterday talking about this.
That I'm working on, which I think is very complementary to the Trump accounts initiative, is how do we get regular people exposure to these private companies and upside? Now you're seeing a world where many of the top AI labs are, private valuations of hundreds of billions, possibly won't go public until they reach the trillions, which means that a retail investor going into an IPO, these companies would potentially have to get up to the hundreds of trillions of market cap for them to get 100x. Yeah. So it's not like, buying Apple or Microsoft and seeing 100x return in public markets. I think that's going to be harder to come by. And I think that's a very dire risk that we're worried about with AI that we're working really, really hard to counteract and to mitigate. I really like Dario. I like how, he writes these long pieces and, every year or so he drops one. It's like, it's a me, Dario, But yeah, I think that the danger is we can get distracted by infinitely many low probability risks while ignoring the thing that's right in front of us, which is these private companies are raising capital at the valuations of hundreds of billions, and the people benefiting from that are dozens, maybe hundreds of people. And how can we get that to millions? Because
it's hypocritical?
Well, if retail investors don't get exposure to these companies, then what I worry about is they're going to fight against it. It's not like in crypto. Crypto did this right from a very early point by distributing the value, letting regular people have exposure to it. And now, whenever there's sort of like risks of government overreach, you have an army of millions of people defending the industry. And I think AI, we're at risk of not having to do that. So actually, the Trump accounts initiative, I'd love to find a way to get AI companies to donate their shares. So
the other headline yesterday was that Robinhood potentially is vying for a major allocation for retail from SpaceX, which would be a big win for retail. Hopefully, that could actually allow people to get access to these companies. But what he's saying right there, I think, is really important in terms of retail democratization and access to these companies so that people feel like they are part of the AI revolution and not isolated from it. But it goes in tandem with the Trump accounts, right? And again, this was my tweet from, what was it, June 9th, 2025, when Robinhood posted this screenshot. This was the day they posted the screenshot of a mock-up of what the Trump accounts would look like. And that day, all of us were thinking, wait a second, they've got the tech, they got the infrastructure, they can execute on this. If Robinhood gets all these accounts and they're going to stay there on the platform basically for the rest of their life, I mean, talk about 3.5 million accounts every year, even half of that per year added to the ecosystem with all those assets, it's going to compound. And that's another way to differentiate the revenue and growth outside of trading volumes, which is what I think the street really cares about right now as well. And hopefully that can happen for Hood. A couple of clips from Trump. We got the Apple call in 9 minutes. Here's what he had to say today about the stock market.
Right now, I think we're getting close. The Democrats, I don't believe, want to see it either. So we'll work in a very bipartisan way. I believe not to have a shutdown. We don't want a shutdown. And just yesterday, the S&P 500 hit 7,000 for the first time ever. There's never been any time at which it's done like that. And the other stocks also, I think it was 52 times for the Dow, had hit a record high. But the 7,000 was not a number that was even thinkable if you go back a year ago. So S&P hit 7,000 for the first time ever. The stock market has set, it's actually 53 all-time record highs since the election, adding $9 trillion in value to savings, retirement accounts, and 401ks. And I mean, everybody benefits, but we have record stock markets. Companies have never done well. And most importantly, if you think about it, after 4 years in which Biden got much less than $1 trillion of investment into our country, in just, actually it was taken over 11 months, even though we're 12 months. In 11 months, we've taken in more than $18 trillion. So they did less than $1 trillion, Scott, in a period of 4 years.
This is what Trump had to say about what's going on with Russia.
Could you explain that?
The Ukraine finished, a prosperity agreement that's largely finished. And I think the people of Ukraine are now hopeful and expectant that we're going to deliver a peace deal sometime soon.
And because of the cold, extreme cold. They have the same that we do. I personally asked President Putin not to fire on Kiev and the cities and towns for a week during this. It's extraordinary. It's not just like cold, it's extraordinary cold, record-setting cold. Over there, too, they're having the same.
So, I mean, maybe we'll get a little bit less geopolitical instability. Again, part of the reason I think oil pumped this morning is because of the idea that Trump is potentially weighing strikes on Iran. If that ends up happening this weekend, then obviously that could complicate things. Let me pull up the poly market for that. Let's see if they have a poll. I'm pretty sure someone took a big bet on that happening by January 31st. Wow, yeah. So 15% chance January 2026. You got bets across the board right here. 7% chance in February that there will be a strike as well. $25 million has bet on this. My goodness, dude. I think that's also part of the betting markets, thinking that this could be something that happens. Let's also check the Fed chair. Trump did say today he'll be nominating the Fed chair next week. Wow, Rick Reeder went down to 36. He was at 46 yesterday. He was at 46 yesterday. Apple stock, by the way, barely holding on after hours, up about 1%. Kevin Warsh is at 35. He's right below him. And you got Waller at 14. You got Waller here at 14. In the poll, you guys, still 70-30 on memory. This was another moment from this Trump press conference that went kind of viral. And it was about Trump talking about people saying that he sleeps during the meetings.
Of people to say a few words, and we're not going to go through the whole table because the last time we had a press conference, it lasted for 3 hours, and some people said he closed his eyes. Look, it got pretty boring. In all fairness, I love these people. But there's a lot of people. It was a little bit at the boring side. But I didn't sleep. I just closed them because I wanted to get the hell out of here. Some of them, I didn't sleep, by the way. I don't sleep much. But, it's funny. Some of them got me in a blink. When you go like, and they took me as at the closed segment of my cycle. And they said, he's sleeping. And besides that, Marco, between these two guys, if I was sleeping, they'd be waking me up very fast. They'd be knocking me, come on, you got to wake up, boss.
So that was at the cabinet meeting today. For those that are saying he's doing some announcement after hours, I see the headline, but he is not live. Trump makes announcement from Oval Office. Let me try to figure out what this announcement is going to be about. And then during the Apple call, I'll try to get the details. I don't see Cactus. You know what this Oval Office thing is going to be about? We got multiple streams that are live. It's an executive order, potentially. Yeah, 4:30. President makes an announcement. Oval Office. It's 4:56. So we don't have that yet. USAR stake, they already announced that, so I doubt that would be it. I don't think it would be about Iran. Crypto, well, the crypto thing didn't pass, right? So, I mean, what would he say about that? It's about crypto. It's about stablecoins. The Clarity Act did not pass today. Am I wrong about that? Let me make sure. I'm pretty sure Trump RX has been delayed. That was my guess. It's about the drug stuff. Cactus, did the crypto stuff? I'm seeing the Senate Agricultural Committee just advanced the Clarity Act, but that doesn't mean the bill is passed into law by any sense of the imagination yet. It has to go to the Senate. Okay, so yeah. Okay, so advanced from a committee, correct. Okay, so advanced from a committee. It did not get approved. We are not going to make the same mistake that the Oscar Bulls made, thinking that the House has approved their subsidies, therefore it's approved. It's like, no, there's something called the Senate. That also matters. Hate to break it to you, Oscar, right there. That stock went from $18 to 14. It should have never been at 18 that day, just because it passed the House. Like, that's irrelevant. So yeah, the crypto stuff still needs to get through the Senate. Now it should get through the Senate. It just might take a little bit more time. The $1,000 Trump accounts, he made that announcement this morning, so I don't think it's gonna be about that. Yeah, I guess it'll be either about Trump RX or something else that we don't know about. Apple will be live. Trump did say 5 hours ago, I had a very productive telephone conversation with the president of Mexico. It went extremely well for both countries. It was focused on the border, stopping drugs. We will be speaking again and ultimately setting up meetings in our respective countries. Once it gets through Senate, then what? Then it gets to Trump's desk and then he has to sign it. But it's got to get through the Senate before it even has a chance to be passed into law. Micron losing its pump after hours, not entirely, but 456 to 444. And then Sandisk 630 to 599. Still up 11% though after hours. It's an executive order regarding drug addiction. Let me pull that up. Maybe you're right about that. Oh, yeah, you're right. You're right. Today at 4 p.m. at the White House, Trump to sign order launching new initiative to address drug addiction. You are 100% right. That is correct. Okay, so shouldn't be an economic thing, but it'll be something about drug addiction. Perplexity links Microsoft cloud deal amid dispute with Amazon. Does anyone care about Perplexity anymore? I feel like they fell off the face of the earth. And I'm not even trying to be mean, but like, does anyone use them, talk about them? Perplexity inks Microsoft cloud deal. Okay, that's good for Microsoft. They're going to pay Microsoft more money. But I'm not sure how much people care about them as much. Apple's still not live yet. We'll get to them once they're live. I use the browser. Oh, dude, Google announced a bunch of things today. They announced more AI browser stuff. And they announced something called Project Genie. I don't know what this is, but it's an experimental research prototype that lets you create, edit, and explore virtual worlds. This is what the video looks like. So you can use text. You can type in something. You can make a character. You can create a sketch. It sounds very similar to what Zucks was talking about last night, these immersive experiences, to be honest. And then there's a dog running through a hill. And you're kind of like prompting it. I'm not sure what the societal utility of this is yet, to be honest, but I don't know what a pink rabbit jumping through this stuff is going to do for anybody, but it is kind of cool. This is the first time I'm watching the video with you guys, to be honest. Maybe gaming? Yeah, maybe like you prompt your own games. Eventually you prompt your own movies. I mean, if I wanted to just prompt my own movie, this is like the first iteration in 10 years. I would imagine this is going to be way better. Maybe that's what it looks like. All right, Apple call. We are starting. Let's get into it. I will get you all the headlines in the chat outside of the Apple call. Whatever Trump says, all that stuff, it'll be in there as well. All right, let's pull this up here.
Risks related to the potential impact to the company's business and results of operations from macroeconomic conditions, tariffs and other measures, and legal and regulatory proceedings. For more information, please
That's not me. Where did the audio go? That's not me. It's not me. That's their call. It's not me, dude. It's not me. You guys can hear me. If it's the Wi-Fi, you wouldn't be able to hear me. It's not possible. It's not me. What is going on? I'll pull up another link and see if that works. I'm telling you, it's not me. All right, I'm going to go to a different website. Let's do it here. Let's go to the Apple website proper.
We are reporting our best ever quarter with $143.8 billion in revenue, $43.8 billion in revenue, up 16% from a year ago and exceeding our expectations. The demand for iPhone was simply staggering, with revenue growing 23% year over year and all-time records across every geographic segment. Services set an all-time revenue record as well, up 14% from a year ago, and EPS reached an all-time record of $2.84, growing a robust 19% year over year. We set all-time revenue records in the Americas, Europe, Japan, and rest of Asia Pacific, and grew in the vast majority of markets we track. We continue to gain momentum in emerging markets, which includes India, where we saw strong double-digit revenue growth. Greater China also grew 38% year over year, driven by iPhone, which had record upgraders and double-digit growth on switchers. Apple's December quarter results underscore our relentless commitment to innovation, to our customers, and to our mission to build the best products and services in the world. Now I'd like to take a closer look at results from across our lineup, beginning with iPhone. As I mentioned earlier, it was a fantastic quarter for iPhone, with an all-time revenue record of $85.3 billion, up 23% year over year. This is the strongest iPhone lineup we've ever had, and by far the most popular. Throughout the quarter, customer enthusiasm for iPhone was simply extraordinary. Users were incredibly excited about everything it enables them to do. iPhone 17 Pro and 17 Pro Max deliver the ultimate iPhone experience. They feature the best ever performance and battery life on an iPhone, the most advanced camera system, and a striking design. iPhone Air, our slimmest and lightest smartphone yet, packs powerful capabilities into an ultra slim and sleek design. And iPhone 17 is a truly fantastic upgrade at an incredible value. Turning to Mac, revenue was $8.4 billion for the December quarter. We were pleased to see the Mac install base reach another all-time high, with nearly half of customers who purchased a Mac being new to the product. The M5-powered 14-inch MacBook Pro takes a huge leap in AI performance thanks to the next-generation GPU architecture and a faster neural engine. From the world's most popular laptop for consumers and businesses in MacBook Air to the small and spectacular Mac Mini, every Mac in our lineup has something special to offer users. And with the recently released Apple Creator Studio, available across Mac, iPad, and iPhone, creators have more tools at their fingertips to make incredible music or turn their devices into a video production studio. Meanwhile, iPad saw December quarter revenue of $8.6 billion, up 6% from a year ago, with an all-time record for upgraders. We are proud to have our strongest lineup ever, from iPad powered by A16, which is proving to be incredibly popular, to iPad Air with its amazing versatility, to the unbelievably powerful M5 iPad Pro with its remarkably thin and light design. It's no wonder that iPad continued to be the most popular tablet in the world. Across wearables, home, and accessories, revenue was $11.5 billion. With Apple Watch Ultra 3 and Apple Watch Series 11, users are tapping into a comprehensive set of health and wellness features to help them meet their health goals. In a recent survey, we see an increasing number of users telling us they're wearing their watch to sleep, which allows them to check their sleep scores each morning and find ways to improve their sleep quality. And Apple Watch alerts are enabling important conversations between users and their doctors regarding potential signs of hypertension. These are just some of the many ways that Watch is helping people live healthier lives. The response to AirPods Pro 3 has been amazing. customers are raving about the rich, immersive sound quality, the unmatched level of active noise cancellation, and the noticeably improved comfort that makes them effortless to wear. Features like live translation are also changing the way people can communicate by helping users connect across languages in real time and making everyday conversations feel more natural and accessible. Together, these innovations create an experience that feels both powerful and personal, and the enthusiasm we are seeing reflects just how strongly AirPods Pro 3 are resonating with customers. Across our product categories, we are seeing very high levels of customer satisfaction, and we are proud to report that we have a new record for our installed base with more than 2.5 billion active devices. During the quarter, we were excited to see that the majority of users on enabled iPhones are actively leveraging the power of Apple Intelligence. Since the launch of Apple Intelligence, we've introduced dozens of features, including writing tools and cleanup, and made it available in 15 languages. These AI experiences are personal, private, integrated across our platforms, and relevant to what our users do every day. We are bringing intelligence to more of what people already love about our products, so we can make every experience even more capable and effortless. One of our most popular features is visual intelligence, which helps users learn and do more than ever with the content on their iPhone screen, making it faster to search, take action, and answer questions across their apps. And as I touched on earlier, we are hearing powerful stories of people using live translation to communicate seamlessly across languages. And these are just some of the many powerful AI features that are enabling our users to do remarkable things with our products, which are far and away the best platforms in the world for AI. That's in no small part because of the extraordinary power and performance of Apple Silicon. Building on our efforts in the AI space, we are also collaborating with Google to develop the next generation of Apple Foundation models. This will help power future Apple Intelligence features, including a more personalized Siri coming this year. We're incredibly excited for what's to come with so many new experiences to unlock. Turning to services, we achieved an all-time revenue record of $30 billion, 14% higher from a year ago. Services also set all-time revenue records in both developed and emerging markets. Apple TV has seen fantastic momentum, with December seeing a 36% increase in viewership over the previous year. It's no wonder with shows like Pluribus, which are creating landmark cultural moments that audiences are loving. Anticipation is building for upcoming new productions like Cape Fear from Steven Spielberg and Martin Scorsese. And we are thrilled to announce that Ted Lasso will be returning for a 4th season this summer. 6 years since launch, we're excited by the growing enthusiasm viewers have for Apple TV, and we are grateful for the accolades that have followed, most recently at the Critics' Choice and Golden Globe Awards. To date, Apple TV productions have earned more than 650 wins and more than 3,200 nominations, including a recently announced Oscar nomination for Best Picture for F1, the movie. And speaking of F1, we're also approaching the start of a new Formula One season, and for F1 fans in the US, Apple TV will be the place to watch every practice, qualifying, sprint, and Grand Prix. MLS fans will also be able to watch every regular and postseason game with their Apple TV subscription this year, and we're looking forward to kickoff in the coming weeks. Looking back, 2025 was a fantastic year for services as we rolled out amazing new features and broke records. Apple Music climbed to all-time highs in both listenership and new subscriber growth. Apple Pay eliminated more than $1 billion in fraud for our partners last year, and we've made it available in more markets than ever before. And last year, we welcomed more than 850 million users every week on average to the App Store, the world's safest and most innovative app marketplace. Developers have now earned more than $550 billion on our platform since 2008. In retail, we continue to bring a magical experience to our customers all around the world, and we were thrilled to have our best ever results in retail during the quarter. We were excited to open our 5th store in India in December and have plans to open another store in Mumbai soon. Wherever we are, we see ourselves as part of a larger whole. That's why we show up with our values in everything we do. That means working with partners in places like Vietnam to bring more clean water to rural areas. It means celebrating graduations of new classes of innovators from our developer academies in places such as Brazil, Indonesia, and South Korea. It means 3D printing titanium cases for Apple Watch using recycled materials so that they're better for the planet without compromising quality, and so much more. We're especially proud of the work we're doing to support American innovation. Last year, we committed to invest $600 billion over 4 years in vital industries like advanced manufacturing, silicon engineering, and artificial intelligence. As we're building on our longstanding investments in America, we're supporting nearly 500,000 jobs with thousands of suppliers across all 50 states. In the year since we made our initial commitment, we're making great progress. Today, we're shipping servers to power Apple Intelligence from our new manufacturing facility in Houston. Through our advanced manufacturing program, we're working with Corning in Kentucky to make 100% of cover glass for iPhone and Apple Watch. We're working with Micron, which broke ground on a new advanced chip packaging and test facility, and we continue to advance the development of an end-to-end silicon supply chain across the country, sourcing 20 billion US chips in 2025. Through our Apple Manufacturing Academy in Detroit, we're already training American businesses and innovators on the latest smart manufacturing and artificial intelligence techniques. 6 months since opening, the Academy is already making an enormously positive impact for businesses working alongside Apple engineers to drive productivity, efficiency, and quality in their supply chains. As I said at the beginning of my remarks, this was in so many ways a remarkable quarter for Apple. And we're excited for all the opportunities we'll have in the year ahead to deliver innovations that have never been seen before and enrich the lives of users every step of the way. With so much to look forward to in the weeks and months ahead, I have every confidence that our best work is yet to come. With that, I'll turn it over to Kevin.
Thanks, Tim, and good afternoon, everyone. Our revenue of
Okay, this is going to be the boring part for the next 20 minutes where they do the financials. I'll try to get some headlines in here, but the next 20 minutes should be.
both developed and emerging markets. And we saw double-digit growth year over year across the majority of the markets we track, including the US, Latin America, Western Europe, Greater China, India, and South Asia. Products revenue was 113.7.
Okay, we'll go back to that. Tesla's pumping. Again, all they're doing is financial stuff. Tesla's getting a candle. This is a little bit more important. We'll get back to Apple in a second. Again, they're literally just reading a PowerPoint right now. Let me see if there's a headline. There has to be one. I don't see it. What's the headline? This has got, are you kidding me? Elon Musk SpaceX is set to consider merger with Tesla. Dude, are they just making up random shit now? Bloomberg, Elon Musk SpaceX is set to consider merger with Tesla. I mean, first they were saying, why is the mic not working? Dude, oh my God. Hold on.
Driven by favorable mix and leverage. Products gross margin was 40.7%, up 450 basis points sequentially, driven by favorable mix and leverage. Services gross margin was 76.5%, up 120 basis points sequentially.
Okay, how about now? You hear me now? Yes. Good. Why is the mic disconnect right? Okay. Now we should be good. Yes. We should be good. Yes. We're better. Yes, yes, yes. No, is it still bad? Yes. Hold on, let me hear myself. Yes. It should be good. Should be decent. Dude, guys, to be honest, don't troll right now. Yeah, it's good, bro. I can hear myself. It's good. Don't troll. I'm trying to figure out if it's good. That's the headline. Elon Musk SpaceX set to consider with Tesla. Okay, it's good now. Davis just says, I think it's your voice. Oh shit, did Elon just confirm this? Hold on. No, Elon didn't confirm this. Wait, no, Elon did kind of confirm. Hold on. Did anyone see this tweet? Hold on. Derek just sent me this tweet. How did no one see this tweet yet? Look at this. Elon Musk SpaceX in talks to merge with XAI before IPO. And then this guy says SpaceX will be the Dyson Swarm company. We are locked in for Kardashev 2. Elon says, yeah. Now, either Elon is saying yeah to the sentiment of what this guy is saying, or he's saying yeah to the sentiment, but the sentiment is a response to the fact that XAI is merging with SpaceX. Of course, Elon would consider it. I mean, yeah, that's fair. Of course, Elon would consider it. But now, is Tesla still holding on? Dude, Tesla 4% now. That's quite the candle. And where did Bloomberg get this leak? The XAI stuff was hours ago. Tesla's pumping is because now Tesla's considered in the merger conversation, which, you know, Elon needs to get the market cap to 10 trillion to get paid $1 trillion. I think they could pretty quickly get that to 10 trillion. Like not in a couple of years, but definitely in a 5 to 7 year time frame. They could get that to 10 trillion if you have XAI, SpaceX, and Tesla. I mean, that's possible. This was Chamath's prediction. Yeah, and remember, Chamath's been a SpaceX investor for like 15 years. That day he said that, I was wondering, like, what does he know to make that type of a prediction? Like, that's a hell of a prediction. 4% on Tesla. It makes sense with Tesla for the factories to merge, revenue growth combining. I mean, it's hard to justify SpaceX at 1.5 trillion doing 15 billion in revenue. It's hard to justify Tesla at 1.4 trillion when they haven't grown earnings in 4 years. But you put both together and you say $2.5, $3 trillion company initially, along with XAI, for $2 billion that owns X, the platform. I mean, it's the Musk enterprises coming together, right? Wasn't this the master plan forever? It kind of makes sense. Now, maybe this rumor is just a rumor, but it also kind of makes sense. All right, I'll go back to Apple. How is the mic messing up again? Oh my freaking goodness, dude. What is going on?
In the US, customer satisfaction was recently reported at 96%. Our services revenue reached an all-time high of $30 billion, up 14% year over year. As we said earlier, we had all-time revenue records on advertising, music, payment services, and cloud services, where we saw double-digit growth on paid subscribers. We continue to be optimistic about the future of our services business. With our install base of over 2.5 billion active devices, we have an incredibly strong foundation for new growth opportunities.
All right, let me know if Mike is better. It's a $400 mic, bro. I don't know why. Let me know if it's better. We both have the same mic. Okay, I'm just switching to the MacBook mic now. This is pissing me off. Throwing away the $400 mic for today. We should be better now. It should be better now. Keeps going in and out. Rolling away. Okay, we should be a lot better. It's not going to sound as crisp, but okay. So that's the Tesla rumor. We'll get back to the Apple call. I'm trying to get some more coverage on this Tesla thing. All we have is this headline by Bloomberg on SpaceX. UPS stock dumps after a mid debacle. There you go. Elon Musk SpaceX set to consider merger with Tesla or XAI. We'll go back to Apple and I'll try to get some more details, but for now, that's the headline we have right there.
Cash position and capital return program. We ended the quarter with $145 billion in cash and marketable securities. We had $2.2 billion of debt maturities and decreased commercial paper by $6 billion, resulting in $91 billion in total debt. Therefore, at the end of the quarter, net cash was $54 billion. During the quarter, we returned nearly $32 billion to shareholders. This included $3.9 billion in dividends and equivalents and $25 billion through open market repurchases of 93 million Apple shares. As we move ahead into the March quarter, I'd like to review our outlook, which includes the types of forward-looking information that Suhasini referred to. Importantly, the color we're providing assumes that global tariff rates, policies, and their application remain in effect as of this call, and the global macroeconomic outlook does not worsen from today. We expect our March quarter total company revenue to grow by 13 to 16% year over year, which comprehends our best estimates of constrained iPhone supply during the quarter. We expect services revenue to grow at a year-over-year rate similar to what we reported in the December quarter. We expect gross margin to be between 48% and 49%. We expect operating expenses to be between $18.4 billion and $18.7 billion, which is at a similar level to what we reported in the December quarter and driven by higher R&D on a year-over-year basis. We expect OI&E to be around $100 million, excluding any potential impact from the mark-to-market of minority investments, and our tax rate to be around 17.5%. Finally, today our board of directors has declared a cash dividend of 26 cents per share of common stock payable on February 12th, 2026, to shareholders of record as of February 9th, 2026. With that, let's open the call to questions.
All right,
Thank you, Kevin.
Q&A.
We ask that you limit yourself to 2 questions. Operator, may we have the first question, please?
Certainly. We'll go ahead and take our first question from Amit Daryanani of Evercore.
I have 2. Maybe to start with, there's a lot of focus on the impact of memory to hosted companies, and I'd love to kind of get your perspective when you folks are guiding gross margins up into the March quarter. Just talk about, A, your comfort in securing the bits that you need for shipment, and B, how do we think about memory inflation flowing through Apple's model over time?
Yeah, Amit, hi, it's Tim. Let me back up a bit and talk about the constraints that Kevin referred to in his remarks and memory. Try to get both of these out at once. First of all, we were thrilled with the customer response on the latest iPhone lineup. It exceeded our expectations, to say the least. And, iPhone grew 23%. What the result of that was that we exited the December quarter with very lean channel inventory due to that staggering level of demand. And based on that, we're in a supply chase mode to meet the very high levels of customer demand. We're currently constrained, and at this point, it's difficult to predict when supply and demand will balance. The constraints that we have are driven by the availability of the advanced nodes that our SoCs are produced on. And at this time, we're seeing less flexibility in supply chain than normal, partly because of our increased demand that I just spoke about. From a memory point of view, to answer your question, memory had a minimal impact on the Q1, so the December quarter gross margin. We do expect it to be a bit more of an impact to the Q2 gross margin, and that was comprehended in the outlook of 48 to 49% that Kevin gave earlier. Beyond Q2, we don't obviously provide outlooks beyond the current quarter, but we do continue to see market pricing for memory increasing significantly. As always, we'll look at a range of options to deal with that. So hopefully that gives you the full view.
Yep. No, thank you. And I appreciate all the clarity on that, Tim. Maybe the other second question I have for you is, maybe just touch on the China strength you folks had. I think this is very close to all-time high revenues we've had in China. What's driving the strength over here, and just sort of the durability of the growth rates we saw in the December quarter would be helpful to understand. Thank you.
Sure. Greater China was up 38% year on year. It was driven by iPhone, where we set an all-time revenue record. So it was the best iPhone quarter in history in Greater China. It's driven by the customer enthusiasm for the iPhone 17 lineup. And I would tell you that during the quarter, traffic in our stores in China grew by strong double digits year over year. It was a terrific quarter. Our installed base reached an all-time high in both Greater China and mainland China. And we set an all-time record for the upgraders, and we saw strong double-digit growth on switchers. And according to a survey from World Panel, iPhones were the top 3 smartphones in urban China during the quarter. So it's really driven primarily by the product strength and the customer response to the product strength. We do see on non-iPhone products that the majority of customers that are buying a Mac, an iPad, a watch are still new to that product. So that's a very good sign for us. And if you look at iPad, on that same survey, iPad was the top tablet model in urban China. And according to Counterpoint, the MacBook Air was the top-selling laptop model, and Mac Mini was the top-selling desktop model in the December quarter. So overall, great quarter in China. We could not be more happy with it.
Awesome. Thank you, Amit. Operator, could we get the next question, please?
You're welcome.
Our next question is from Eric Woodring of Morgan Stanley. Please go ahead.
Great, guys. Thank you for taking my questions. Tim, congrats on announcing the partnership with Google, and we're all excited to see what you bring to market later this year. When I think about your AI initiatives, it's clear there are added costs associated with that. We're obviously seeing that flow through in OpEx. Can you help us understand maybe what the revenue upside potential that exists with AI? Many of your competitors have already integrated AI into their devices, and it's just not clear yet what incremental monetization they're seeing because of AI, but you're always disciplined with investing. You obviously have a differentiated product. So how do you monetize AI, and what's the timeline to realizing that ROI? Then a quick follow-up. Thank you.
Well, let me just say that we're bringing intelligence to more of what people love, and we're integrating it across the operating system in a personal and private way. And I think that by doing so, it creates great value, and that opens up a range of opportunities across our products and services. And we are
super helpful.
And we're very happy with the collaboration with Google as well, I should add.
Okay, thank you, Tim. And then maybe just a follow-up. Now that you have kind of more time and data to evaluate this cycle, can you maybe help us understand what the primary factors are driving strength in the iPhone? I'm sure there's a number of factors, but if you had to point to one or two, just what would they be, and how sustainable do you think those are?
I think it's different for different cohorts of where people are coming from in the device that they have. But it's a combination of things always that make the product sing. It's the display, it's the camera, it's the performance, it's the new selfie camera, it's the design. The design is beloved. And so it's all of these things that come together at once and are producing a very strong product cycle, as witnessed by our December quarter results.
Great. Thank you, Tim. Best of luck.
Yeah, thank you.
Awesome. Thank you, Eric. Operator, could we get the next question, please?
We'll now go to Michael Ng of Goldman Sachs. Please go ahead.
Wonderful. Good afternoon. Thank you for the questions. I have two as well, if I could. First, it was encouraging to hear about the revenue growth outlook of 13 to 16% for the March quarter. I was just wondering if you could, talk about any comps that we should be particularly aware of as we kind of think about each of the product categories. I know last year you guys had, MacBook Air with M4, the iPhone 16e, the iPad 16, and the iPad Air with M3. So just wanted to, ask if those things would create tough comps, or is it just less of an issue just given the new product outlook? Thank you.
Yeah, Mike, it's Kevin. How are you? Thanks for the question. Yeah, I wouldn't say there's any particular comp issue that we'd note. As you recall, last quarter we talked about the difficult comparison we had on Mac, but there's nothing that rises to that kind of color that we'd outline, in the outlook. And so I think it's just, continuation of the strong cycle we're seeing, subject to the constraints that I had mentioned in the prepared remarks that Tim, alluded to a little earlier as well.
Great. Wonderful. And then, just on services, advertising, strong in the quarter. I wanted to ask about some of the, new growth opportunities in advertising. I know you guys are doing the new ad slots in the App Store. Maybe you could just talk a little bit about that, and then any plans to do more in advertising across other products like Maps or TV. Thank you.
Mike, what I would say, just if I step back in general, I think as we outlined, we saw really good broad-based performance in our across our services business. So ranging from, all-time records in advertising, music, payment services, and cloud services. So I think we see really good opportunities across a lot of our service categories, and we continue to, add new service offerings. We talked about, what we added to the wallet, like digital ID, and you referenced the additional additional ads coming in the search in the App Store, which we are excited about. It provides, advertisers more ways to be discovered. And so I think we'll continue to look for ways to expand opportunities to add value to users, and also create opportunities for Apple. I think as we talked about, we created, across a really significant milestone at 2.5 billion, active devices. So we really feel excited about the opportunity that provides for our services business as well.
Wonderful. Thanks for the thoughts, Kevin.
Awesome.
Sure thing.
Thank you, Mike. Operator, could we get the next question, please?
The next question will be coming from Ben Reitzes of Melius. Please go ahead.
Yeah. Hey, guys. How are you?
Hi, Ben.
Hey, Tim. First question is on Google partnership again. I wanted to understand how you came to that decision with regard to the AI and Siri in particular, and if there's an opportunity for you guys to share in revenue too with that partnership like you do in search. Thanks.
Yeah, we basically determined that Google's AI technology would provide the most capable foundation for Apple Foundation models. And we believe that we can unlock a lot of experiences and innovate in a key way due to the collaboration. We'll continue to run on the device and run in private cloud compute and maintain our industry-leading privacy standards in doing so. In terms of the arrangement with Google, we're not releasing the details of that.
Bummer. Okay,
Yeah.
well, I tried.
You did.
So, yeah, you knew it would be me. So the next question is on gross margin. You know, I'm pretty shocked. I gotta hand it to you, Tim. That you're able to do 48 to 49. What's really going on there? How are you doing that with this memory, the NAND prices? Is it due to mix that there's a less hardware and more services, and services margins are going up? How are you doing it to keep it at 48 to 49?
Yeah, Ben, this is Kevin. How are you doing? Let me start maybe by just reflecting on the Q1 gross margin. I think we talked about the fact that we landed at 48.2%, so just above the high end of the range that we provided, on the last call. And I think if you look at that performance, we were up 100 basis points sequentially. We talked about the fact that we had favorable mix. I mean, as you know, when we have a good product cycle, strong product cycle, we're seeing for iPhone, that does lend itself to a bit more favorable opportunity on the mix and leverage side. So we're having a strong iPhone cycle, as Tim outlined. And so that also translated itself. So we talked about products sequentially went by 450 basis points. So I think in general, I think we're just seeing, favorable mix dynamics as well. Services continues to contribute as well. That business is growing, double digits. So that also is a contributor. And I think that, if you looked at our guidance, we're providing a similar range to where we reported in December. And there's going to be a few puts and takes. We do expect to see favorable mix into services. As you know, when we move from Q1 to Q2, that tends to be the case. And that's partly offset by a seasonal loss of leverage. So there'll be puts and takes. But, again, we feel pretty good about the guide of 48 to 49%, which is similar to the range we reported in December.
Wow. Okay, great. Thank you.
All right. Thanks, Ben. Operator, could we get the next question, please?
The next question will be coming from David Vogt of UBS.
Great. Thanks, guys, for taking my question. Maybe Tim or Kevin, if we could pull out a little bit, can you help us understand how you're thinking about the overall kind of smartphone market demand, particularly given where memory prices are headed? And we've heard some conversations with some other OEMs as well as component providers that are worried about either the availability of components, potential market weakness in terms of demand destruction, if some of the actions to offset or higher prices. I know you don't give outlooks for the full year, but how are you thinking about all of those different vectors and what that might mean for the overall smartphone market, and then ultimately what that might mean for demand for iPhones as we move through the rest of this calendar year?
Yeah, on the supply side, I had made comments earlier about the constraint that we are seeing in Q2. And that's reflected in the revenue guidance that Kevin gave earlier. The constraint, as I'd mentioned, is due to the advanced node capacity. And it's really a result of growing so well in Q1 with the 23% and having less flexibility, partly due to that in the process to increase it as much as we would like to increase it. Beyond Q2, I don't really want to comment on supply. Supply is a function of a lot of things in the industry that move around a lot. So I wouldn't want to comment on that. I commented before on memory pricing, and so hopefully that answers your question. Oh, in terms of smartphone demand, we believe that based on the information that we've got is we gained share in the December quarter. Obviously, the market wasn't growing at 23%. So we feel good about doing that. And but I wouldn't want to predict how the market reacts in the future. It's very difficult to do that.
Got it. At the risk of not getting this answered, I'm going to follow up with, can you maybe help us understand, you mentioned there's a range of options that you're looking at. How should we think about kind of like LTAs in the marketplace? I mean, is that an option as we move through the year, or is it more spot-based from a perspective, particularly around memory? Just trying to get a better sense for how we should think about kind of the dynamics in the marketplace.
It's a range, and so I don't want to get more specific than that. I mean, there are different levers that we can push, and who knows how successful they'll be, but there's just a range of options.
Thanks, guys.
Yeah.
Great. Thank you, David. Operator, could we get the next question, please?
We'll now be taking a question from Wami Mohan from Bank of America. Sorry for pronunciation.
That's fine. Thank you. Tim, on the services, you grew a pretty impressive 14%, and I know you said that the App Store was a record for the December quarter, but third-party data is showing a notable deceleration in App Store growth, maybe 7% in the December quarter relative to your 14% growth. Was hoping if you could maybe confirm that, and secondarily, if it's correct, what might be some of the drivers of that, and what could be things that you could do to reverse that in future quarters? And I have a follow-up.
Hey, Wamsi, it's Kevin here. Look, I think we want to reiterate the fact that during the December quarter, we had a quarterly record on the App Store. As you know, we don't provide, specific color on how the individual services categories have done. But again, if we step back, I think we saw, again, broad-based growth across all the different categories, also across, various geographies. We had, all-time records in both developed and emerging markets as well. So, and double-digit growth in both of those too. And so I think in general, we don't provide, the color at the detailed, services level.
Okay, thanks, Kevin. I guess back to the memory price. I appreciate you have a range of options to address that. Historically, Apple's not used a pricing lever unless FX markets got maybe very dislocated to prevent arbitrage or issues like that. But given some of these unprecedented moves in memory, would pricing be a lever that you would be willing to pull or push, and outside of every other thing that outside of everything else that you can do?
Yeah, I wouldn't want to speculate on that one.
Okay, thanks, Tim.
Yeah.
Thanks, Wamsi. Operator, could we have the next question, please?
We'll now go to Samik Chatterjee of JP Morgan. Please go ahead. Your line is open.
Yep. Hi. Thanks for taking my questions. Maybe for the first one, I'm just looking at your capital investment in the first quarter, which did moderate from the last one, and wondering if the partnership with Google on Gemini and sort of help collaboration to develop the next generation of Apple foundational models, does that have any near-term sort of impact on your intent to use Apple Private Cloud? I know you emphasize sort of the role Apple Private Cloud plays in the long term, but are there any changes on that front through this collaboration? Any thoughts around that? And I have a quick follow-up. Thank you.
Yeah, sure. I think this is Kevin here. I think in general, as Tim outlined, we weren't going to provide any details on our, arrangement and collaboration with Google. Just speaking of CapEx in general, as you know, we have a hybrid, model for CapEx. And so I think that, what happens is our CapEx can be volatile, independent of kind of the volume of performance of our business. And as you know, our CapEx is made of several different line items that include tooling, our facilities, retail investments, investments in our retail store, data centers. And on tooling and data centers, we leverage this hybrid model that I mentioned before, which we leverage a combination of first and third party capacity. So in general, it's hard to read into the CapEx and draw any conclusions. And so I think I would just say there's going to be some ebbs and flows in CapEx. Last year, remember, we did build out our private cloud compute environment, and so we did have CapEx spending related to that in our results in December.
Got it. And my follow-up probably is for you again. You did mention product gross margin and the sort of drivers there for the product gross margin improvement. When you sort of highlighted mix as a driver, can you just sort of talk through what are the big differences in mix you're seeing for iPhone 17 versus 16? And did tariffs coming in more favorable play a role at all, and what you're expecting for tariffs for the next quarter?
Yeah, so there's a few things to unpack there. So on the overall margin on product side, I think I mentioned that we had favorable mix of products and leverage. I think given the strong iPhone cycle we're seeing, that was, I would say, probably a higher favorability than you might have seen in maybe other cycles. And as well, as you know, in Q1, typically we do see the impact of the cost structure of our new products that we launch. And in this case, we were seeing a more favorable offset from mix of products and leverage versus historical, sequential changes from Q4 to Q1. On the tariff piece, we had outlined a amount of $1.4 billion for the December quarter. and we landed roughly in that range, and at that level.
Thank you.
Awesome. Thank you, Samik. Operator, could we have the next question, please?
We'll now go to Krish Sankar of TD Cowen. Please go ahead.
Yeah, hi, thanks for taking my question. The first one I have for Tim. I think you touched upon this earlier on the Gemini integration and Apple foundational model. How to think about kind of like the difference between Apple foundational model functionality and third-party models? Like, does the Apple foundational model evolve to a different layer in the AI software stack? How to think about it as you partner with third-party frontier models? I had a follow-up.
Yeah, Krish, you should think of it as a collaboration. And we'll obviously independently continue to do some of our own stuff, but you should think of what is going to power the personalized version of Siri as a collaboration with Google.
Got it. Awesome. And then a quick follow-up for maybe Kevin or Tim. Just a lot of discussion on memory pricing. Given that the memory constraint or commodity scarcity is impacting both the smartphone and the PC markets, and Apple arguably having more purchasing power, do you think this is a chance for you to increase your market share both in iPhone and Mac at the expense of competition who might have more constraints in getting access to memory?
Yeah, I'd only want to talk about kind of what has happened. And we do believe, as I had shared, that iPhone gained share in the December quarter. And if you look at Mac for the full calendar year of 25, we also believe we gained share. And so we feel very good about our position.
Thanks, Tim.
Yeah.
Thank you, Krish. Operator, could we have the next question, please?
When I go to Atif Malik, calling from Citi. Please go ahead.
Hi, thank you for taking my questions. The first one for Tim. Tim, some of the industry pundits are comparing the iPhone 17 upgrade cycle to the 2020, 2021 years as some of the iPhone 12, 13 users upgrade. Curious if you agree with that view, and also if you can layer on the impact from Apple Intelligence to the refresh rate.
I think each iPhone cycle has its own unique characteristics. And so I wouldn't compare it to a specific one. I think iPhone 17, the family of 17, is a unique product that brings several very compelling features in one product, and it has done extremely well. And so we feel quite good about it.
Yeah, Tiff, I'll just add to Tim's comment that we talked about the fact we have a large and diverse install base of customers, and so this product has really resonated with multiple cohorts, whether you're on older devices or newer iPhones as well. So we've seen really strong reaction to the product lineup.
Great. As my follow-up, there was a lot of discussion on supply constraints, and I'm surprised that you guys are constrained on advanced packaging as you generally get your share at the big foundry. How long will these supply impact your ability to ship to true demand?
It's difficult to estimate demand when you haven't met the demand. And so we have internal estimates on that, but I don't want to share those. But it's very difficult. And just to be clear, it's the advanced nodes that like 3 nanometer to be specific, where our SoCs are, the latest SoCs are produced on as to what is gating the Q2 supply. And it's a direct result of the 23% growth, and that far outstripping what we had internally estimated, and having more limited flexibility in the supply chain for some period of time. But I don't want to estimate when supply and demand will balance at this point.
Very helpful, thanks.
All right.
Yep.
Thank you, Atif. Operator, could we have the next question, please?
The next question will be coming from Aaron Rakers, calling from Wells Fargo. Please go ahead.
Yeah, thanks for taking a question. I have two as well, and I'll try and stay away from the memory question. I'm curious, and obviously a lot of focus on the China demand, but I'm curious. You also called out India, and so can you maybe unpack some of the things that you're seeing in the Indian market? As far as iPhone traction, any kind of color on, what is a very large install base in India that seems to be a good growth opportunity for Apple still?
Yeah, thanks for the question. We did set a quarterly revenue record during the December quarter. And to go a little further down, we set quarterly revenue records on iPhone and Mac and iPad, and an all-time revenue record on services. So it was a terrific quarter in India. We really like what we see there. It's the second largest smartphone market in the world and the fourth largest PC market. So, and we still have, despite very nice growth history, we have modest share there. And so we think there's a huge opportunity for us there. And we could not be more excited about it. If you look at the other thing that I would point out is that the majority of customers that are buying iPhone and Mac and iPad and Watch are all new to that product. And so it speaks very well to opportunity there.
Yeah, and Aaron, I'd add, you mentioned the install base. We're seeing strong double-digit growth in the install base in India as well, which is really encouraging.
Yep. And then as a quick follow-up, kind of tied to memory, maybe not so much, but part of this current generation, iPhone cycle is you clearly deepen some of your own internal silicon capabilities on the device. I'm curious if we should think about that as a lever and maybe a supportive factor to gross margin that might be underappreciated, and any thoughts on where we go from here as far as continual opportunities of internalizing your own silicon. Thank you.
Yeah, I'll let Kevin talk about the gross margin, but in terms of the product, which is at the heart of what we think about in the user, Apple Silicon has just been an incredible game changer for us, starting with iPhone and then on iPad and, of course, the Mac as of a few years ago. And so we believe it's a game changer and a major competitive advantage.
Yeah, and as far as impact on gross margin, we have been, as you know, investing in core technologies like our own silicon, our own modem. And certainly while those do provide opportunities for cost savings and can be reflected in margins, they also importantly provide, the differentiation that's really important for our products as well and give us more control over our roadmap. So I think there's a lot of strategic value to it, but also we are seeing, investments in our core technologies impacting, gross margin in a positive way.
Yep. Thank you.
Awesome. Thank you, Aaron. Operator, could we have our last question, please?
Most certainly. Our last question will be coming from Richard Kramer, calling from Arete Research. Please go ahead.
Thanks very much. I have two questions. Tim, when you think about how Apple might manage AI, do you see that evolving towards more edge AI or on-device services versus cloud-based AI? And are you confident you've reserved sufficient data center capacity to support the widespread Siri adoption, especially given that you're not following the other hyperscalers and sharply increasing CapEx?
The answer is that we see both being important, the on-device and the private cloud compute. And so we don't see it as an either or, we see it as a both. And, and we believe it's a differentiator because of our privacy approach. In terms of do we have enough capacity, it's hard to estimate with precision what the demand will be. But we've done the sort of the best job that we can do, and either have or are putting capacity in for it.
Okay, and you mentioned the 2.5 billion active device number, but Apple Intelligence features have only been available since the 15 Pro. So can you speak at all to roughly what portion of your iPhone or overall active device install base is now AI capable? And has this been a factor in maybe a more gradual pace of launching wider AI services?
Yeah, Richard, this is Kevin. We don't provide that specific number, but it is a growing number, as you can imagine, in our install base. And so we're encouraged by the amount of devices now that are capable, but we're not going to provide a specific figure on that today.
Okay, well, had to try. Thank you.
All right. Thank you, Richard. A replay of today's call will be available for 2 weeks on Apple Podcasts, as a webcast on apple.com/investor, and via telephone. The number for the telephone replay.
All right. That's Apple. That's Apple. So much happened in the past hour outside of Apple, but that was the call. I mean, Tim Cook was pretty bullish, dude. I mean, like, he had some pep in his step, the way he was talking about China growth, the way he was talking about iPhone sales, the way he was talking about the Gemini Google partnership. He had a pretty big endorsement of Google. He said Google was the best choice that we could find. Apple right there, up about 0.5% after hours, nothing too crazy. But you do have a little bit of green. Chris is on his way. He's in the Uber, so he should be here in like probably 15 minutes, and then we'll get him on the show. I am going to give a call to our friend. Let's see if he picks up right here. I don't know if he even saw the Apple results, but we'll see. We'll see if he picks up. Sandisk still up 15% after hours. Steve.
I'm back.
I'm live.
You are. You're always live.
Did you see these Apple earnings?
How do you like them apples?
I think you saw these Apple earnings.
I may have seen it.
I mean, what was the milkman's reaction to 15% growth EPS for the first time in 4 years for Apple?
I mean, they're proving me wrong,
Well, they're proving everybody wrong, to be honest, not just you. I mean,
as a shareholder, I love it. I guess I got to stop making fun of the Apple stock, right?
yes, you have to stop making fun of Apple stock. EPS 284, 268. China revenue beat by $4 billion. Regular revenue up by $5 billion. We got to give it up to Tim Cook, right? We just have to on this one.
I mean, Apple's going to put up the again. This is the it just started setting the tone with the offense with 143 billion in change in revenue compared to 124 billion last year in Q1. So, I mean, this is big. The iPhone super cycle is real. 85 billion. I mean, everything's good. You look at services. The services is the real story. You have a jump from 26 to 30 billion in Q1. That means that you're on a run rate with services this year of 120 billion plus as a homegrown business segment.
I forgot. Someone in the chat just said Amit has this in his draft. I do have Apple in my draft. And we're up a nice little 30% on Apple.
I was looking at the draft a minute ago. And as bad as some of my picks are, I'm no longer in last place.
Who's in last place? Chris? What happened to Chris? Oh, UNH. I forgot.
Saved, Micron's up 263%.
Yeah, you're up 10% on the ETF. I mean, it's not too bad. Matt's still at 50. I'm at 21. Tanner's at 18. Steve is at 10. Chris just got hit from UNH the other day, so he's at 4. Yeah, pretty wild. I mean, look, big tech crushed it so far. Apple did amazing. Did you see this SpaceX merging with Tesla headline after hours?
And XAI, you mean how Elon honeydicked everybody to get his freaking comp? He's just going to merge all three?
I mean, it makes sense, right? It makes sense. Elon Musk Enterprises, why not?
I mean, if I was Elon, I would 100% do that. Laugh all the way to the bank because that will ensure the valuation.
Also, I think you could justify $2 trillion market cap on a SpaceX Tesla XAI thing, but all of them,
I don't see how you don't.
all of them independently, it's hard to get to that valuation. So
I'll stop talking shit about it.
yeah, I mean, it's hard to be like Tesla's overvalued if Starlink and XAI and all that stuff is part of it.
And it makes complete sense because then he's going to say, cool story with Verizon and AT&T. Optimus is running on Starlink, bitches.
Yeah.
So.
Okay, but if you had to put a percentage probability, I know we all just heard the headline. Like, do you really think they would merge them before SpaceX IPOs?
10 or 15%.
I think that's fair.
I think he's testing the waters to see how much flack he gets, to see if Trump or anyone else comes out and be like, hey, shut the fuck up. We're not letting this fly. If he doesn't get any pushback, watch the freaking comments start up more and more. And then if he thinks it can happen, he'll do it. I think this is just a fishing expedition.
Sandisk beat EPS by 100%, revenue by 80%.
Tanner just called me and asked me if I was looking at Sandisk at all.
Well, I mean, at the end of the day, it's another memory name. I mean, I pulled the chat. Who's buying memory after these earnings? 70% still said can't buy this much momentum, which is what we said last December. And I feel like it's still hard to buy into this much momentum.
I need a reality check from you. I just put a tweet out. I'm seriously thinking about starting another new position.
I know. I saw your tweet. I responded to it.
ServiceNow. Oh, I didn't see that you responded. I gotta tell you, I didn't like this company that much a month or two ago, and now I really like it. And I think it's because of what the CEO said yesterday. Did you hear what the CEO said?
I didn't. Let me know.
Okay. He is so bullish on the future. He is implementing a $5 billion buyback program. He has a special message for the shareholders. $5 billion buyback, $2 billion immediately. Once the window opens up in the next couple of days, since they just reported, $2 billion is going to work. Basically, anybody who's selling can sell right now. Any changes current. He's no longer taking cash. He's getting paid in all stock. That's how much he believes in the future of this company.
Look, I don't know much about ServiceNow, but I don't hate the idea simply because I cannot believe that software has been decimated the way it is.
This thing's been chopped in half. It's growing, and people are not getting rid of this, and their TAM is still huge.
Well, okay, so besides ServiceNow, which I think it's worth doing some digging into, Microsoft had its worst day in 5 years. I mean,
It's dumb. It's dumb.
Did you buy the dip? Are you thinking of buying the dip? Like, what are we doing with Microsoft?
I am buying the dip. I was in meetings all day, so I'm trying to catch up on everything. I actually don't even think I'm going to write an article tonight. I'm just freaking I'm going to go live later, but I'm just reading right now. There's so many opportunities for long-term investors. I actually just logged into my account and looked up what I can free up instead of adding fresh capital, because I think there's some long-term, or maybe not long-term, but I think there's companies that are so low that in 6 to 8 months, they're 20 to 50% higher than where they are today.
Real quick, Trump signs executive order declaring a national emergency and establishing a process to impose tariffs on goods from countries that sell or provide oil to Cuba.
Doesn't mean anything.
Yeah, I don't think it's going to mean much.
Doesn't mean, oh no, Cuba, like, you tell me countries are like, okay, cool, we make a couple $1 million from that, we'll just stop selling.
Yeah.
Means nothing.
So the Microsoft thing, so I don't know how many takes you heard, but what I heard was Azure was supposed to do 41%. They did 38. CapEx was up, and the street took $400 billion away from the market cap. Like, did that at all make sense to you, or do you think it was an overreaction?
It's a bunch of babies overreacting. It's the same thing that's happened to Amazon in the past when I freaked out on analysts. And you know what? This is ridiculous. We need to get to the realm of reality right now that Azure growing by 38% is amazing. Just because the street wanted 40% plus and they take it down, and that's one of the reasons, we need to get back to reality, because you know what? Microsoft, to my knowledge, and I could be wrong, but I don't remember them ever saying 40% year-over-year growth. And 38%, it's pretty damn good, pretty bullish. So they're just nitpicking right now over bullshit. And the idea that OpenAI is a bust.
Speaking of OpenAI, I got a headline for you. Wall Street Journal, OpenAI plans Q4 IPO.
Okay.
That is the date of our rug pull, folks. We have the top confirmed.
we have the rug pull because it's an IPO at $1 trillion, $250 billion in a month.
Get ready to get the hell out in December. At least they're telling us. It's a nice.
No, they're doing it for the Santa rally.
They're doing it for the Santa rally. That's why.
Do you want me just to get on StreamYard? Would that be easier?
I'll send you a link. Chris is about to be in my apartment in like 10 minutes, and he's going to be in person. So all three of us can be here.
Yeah, I'm here. Did you see the picture I sent you?
I did not.
My bullshit dividend harvesting portfolio for Seeking Alpha was up today during all the craziness.
Well, it makes sense because growth fell. Value dividend should have been up today.
Can you believe that?
Yeah, I'm looking at it right now. Okay, I'll send you the link. We'll see you in a second. Dude, Q4, baby. Guess we got to enjoy this market before Scam Altman pulls off the IPO of the century, bro. I don't even hate OpenAI. I don't know why I've become such an OpenAI hater the past couple of days. Like, I don't like, not even like, I don't care. If OpenAI wins, NVIDIA does well, but it's just, it's kind of crazy, dude. Now it makes sense why they're raising this $830 billion new round. It's because they're ready to go public. I mean, Brad Gerstner, he did hint that they were ready to go public yesterday, right? He said this is the final funding round before going public. The problem is I thought they were going to go public in 27 and Anthropic was going public this year. And Anthropic has a hell of an argument to go public. I don't know if OpenAI has the best numbers to go public. Maybe I'm wrong. Obviously, we don't know the full numbers, but I guess we're going to see. I'm just kidding about OpenAI being the top, but it is one of those things where it's like, dude, SpaceX merging with Tesla to justify the IPO potentially, OpenAI going public. You got NVIDIA that can barely get a multiple, but Sandisk is going to the moon. And again, Sandisk is not, I don't think it's a bubble or anything. The earnings growth is phenomenal, but it's just, it's been an incredible 29 days to start off 2026. Writings on the wall for Tesla, SpaceX, XAI. I agree. It makes so much sense. I don't know why that wouldn't happen. Oh, wow. The Wall Street Journal headline, OpenAI plans fourth quarter IPO in race to beat Anthropic to market. Rivals are competing to be the first major generative AI startup to tap the public markets. Dude, I feel like Sam Altman is so annoyed that Anthropic's getting all the love. And if they were to go public and OpenAI were to be private, I mean, yeah, you kind of can't let them get ahead of you by going public. Sandisk, by the way, I think some quotes from the call is that they are booked by every hyperscaler for the next year and a half. That's also helping them continue to get momentum. 75% beat again on EPS and a massive beat on revenue. Yeah, SpaceX was planned for June, I believe, which obviously would be a big deal. I mean, if SpaceX now is a Tesla play. By the way, the Bloomberg article, this is the quote they had on why you could justify. Bloomberg said, different parts of Elon's grand vision for SpaceX of the company putting data centers into space do involve complex computing for AI. It would be potentially served by various scenarios. XAI could benefit enormously from computing capacity provided by SpaceX's data centers in orbit if the company can make the engineering work. Tesla's ability to manufacture energy storage systems could help SpaceX use solar energy in space to run the data centers. It makes so much sense. Musk has also discussed using SpaceX Starship rockets to carry Tesla's Optimus robots to the moon as well to Mars. That's a $10 trillion company. It's not going to happen overnight, but like that, just that vision alone, and then if they can get the earnings growth behind it. But again, what do people think is the probability? Put in the chat, what is your percentage probability this actually happens by SpaceX IPO? I still think it's less than 50%. Unless Elon's, as Steve said, trying to see what people think, and if people really come together around it, the FCC is fine with it, all that stuff, which I don't know if the FCC is going to hate it, but maybe it becomes a lot more likely. Maybe it becomes a lot more likely. Dave.
What's up?
What a day, dude.
I mean, unfortunately, I couldn't look at anything today. I was in meetings all freaking day.
Honestly, it's good, dude. The entire market in the first 2 hours was just bloody red. The S&P ended flat by the end of the day.
You know what wasn't bloody red?
What?
Meta motherfucking platforms.
You know, you're not wrong. I mean,
I'm going to beat that drum so hard because I've been saying that this was ridiculous since the numbers came out last quarter, and it was unwarranted. They basically just told everybody they're dumb. And I love it. I'm here for it.
Do you think Zucks did what he had to do to change the narrative on the stock yesterday?
I think he could have done more, but I think he did enough. I think he could have done a lot more. I mean, I didn't like the fact that he basically just passed the baton and he spoke the least amount I've ever heard him speak on a conference call. So,
but this operating cash flow, 115 billion, that's crazy in one quarter.
It's amazing.
I mean, that's
I showed everybody's complaining about the expenses going up, but you look at the expenses versus revenue. I don't even remember what sheet I put it in, or I'd pull it up, but forget cash from operations for a moment. They just did, what did they do? Over 200 billion in revenue
for the year. Yeah.
So their revenue is jumping. I don't care about 165 billion in expenses this year because they'll probably do 225 or 250 billion in revenue. It's just going to keep getting bigger. And this is my biggest thing. Don't doubt a company that has more than a third of the global population utilizing its products.
And they grew 7% on that population. Where are they finding these people?
So when did you start really following Meta?
I owned Meta at $310 in 2022. I saw it go to $240. That's when I sold it to buy Palantir at 12.
So
since
I
then,
don't remember when Zuck stopped saying this. So maybe you'll remember if you heard this. Every earnings call, he would say, at some point, our growth in DAUs will end. It just didn't end this quarter. You notice how he hasn't said that for the past several quarters?
Yeah. I mean, they literally changed the way they report DAUs to hedge, just like Netflix is trying to hedge the subscriber growth. They keep growing. So,
I'm excited.
The biggest part of that earnings, after I really went through the numbers again today, 33% guide on revenue growth. What?
Dude, I'm telling
you.
What
other Max besides NVIDIA is doing that?
People are complaining about their expenses and CapEx without realizing or without understanding that expense growth drives revenue growth. Revenue growth drives cash from operations growth. You need to spend to make money. This is not a company that is ridden in debt. The 30 billion that they just took on in debt, they have 80 something billion on the balance sheet in cash on hand. They can write a check tomorrow and eliminate the debt. Not to mention, when you're doing over 100 billion a year in cash from operations, you can do whatever the hell you want to do.
You can do whatever the hell you want to do. No, you're right. You can do whatever the hell you want to do. I think the other real important thing around this is that, again, everyone's like, what are you using the CapEx for? And Zuck's basically said, I'm using the CapEx to grow the advertising flywheel. I think the street wants more, but the street also realized if he's going to spend 130 billion and he's going to grow 33%, whatever the hell he's doing is putting up growth. Maybe we don't need some new form of revenue. Maybe the ads are enough. I think that's what the street said today. And they took it up 10%.
I gotta tell you, I am so bullish on Meta that this could go down tomorrow. It can go down the next day. I'm so excited for this year. I think this year and next year are going to be pivotal years, and Meta is going to do so good that everybody who's bearish, everybody who's a non-believer, they're going to have no choice but to believe.
I agree.
And I've been saying this is going to be the earnings call. This is going to be the quarter. We're not going to have a repeat of last quarter, and we didn't. I also think that the Microsoft one is so overdone. The reality is no other company is doing what Microsoft is doing. Don't single them out because of freaking you wanted 2% more growth. I mean, this is what it reminds me of. I made the reference before when I was on the phone. There was a quarter, and I can find the article and I'll put it on X at some point that I wrote. Amazon guided, it was a range within like $8 billion on revenue. And they came in the middle of that range for a quarter. But the analyst estimate or the consensus estimate on the analyst revenue was a little bit higher. And the stock sold off like 10%. And I came out and said, this is dumb. The analysts don't know the business better than Bezos. And for Bezos to come out and say that we're going to do between, for argument's sake, 100 and 108 billion in revenue, and then them come in at 104, and it gets sold off because they did what they said they were going to do, and the analysts wanted more. This is the same situation. You're telling me Microsoft isn't going to be higher in 6 months from now? This is obscene. It's obscene.
Yeah, dude, look, I didn't buy it today, but it feels like an obvious buy. It's just the only two bear cases are this OpenAI overhang and the SaaS narrative being bad. But both of those are narratives. They're not rooted in numbers or anything real at all.
Well, one is real, one isn't. The OpenAI overhang is kind of real. The SaaS one is not real. And you know what? For Microsoft, if OpenAI goes kaplowy, that's probably bullish for Microsoft because they just take over the whole company. I mean,
yeah, but their equity stake. Well, to be honest, they only put 20 billion into it. As long as they can recover.
It's a freaking blip in the radar. Think about that. If they take over OpenAI, they do whatever they want with it. It's a no lose situation for them.
You own Microsoft already, though, right?
Not a lot. I own it, but not a lot. I want to buy more. I am going to buy more. I
think your next Seeking Alpha article should be Microsoft. I think people would love to hear.
I wrote about Microsoft not too long ago. Let me see when I did. I got to figure out when my timeline. They like stuff spaced out, but maybe because of earnings. So I wrote an article in December. I probably have to wait a little bit.
Chamath says a merger between SpaceX and Tesla would instantly create the Berkshire Hathaway of the modern century. The capital raising and operational efficiencies if both were together are obvious. If this were to happen, it would also bring us one step closer to having one equity instrument for all things Elon, which many would want to buy. He's right.
He's right.
It would be the Berkshire Hathaway of the 21st century.
Yeah.
And it would probably outperform.
You're telling me that Elon didn't have this freaking figured out before he did this deal?
It's a big idea, dude.
And think about it. SpaceX and freaking XAI are both private companies. He doesn't even need a freaking shareholder vote at that point.
Yeah, make the ticker Elon. That'd be crazy.
That would be heroic. If he does that, that'd be heroic. Absolutely heroic.
Okay, so I'm waiting for Chris. He should be here soon. I don't know if he's got stuck up in traffic, but he should be here in a bit. And we'll get his thoughts on Meta as well. Again, Chris went pretty heavy on Meta back in November. I think that became his biggest position or top two. So it's been a good day for him. You think the SaaS thing is completely overdone? Salesforce down 7% in a day. This is pretty impressive.
Yes, it's completely overdone. One of the comments that came in last night on my stream with Tanner was that when Gen Z and Gen Alpha, or whatever the two youngest generations are, when they're in the workforce, SaaS is completely dead. And I'm like, well, that just shows that you have no idea how business operates. I mean, okay,
Someone
cool.
They said Gen Z wouldn't be able to use SaaS products. That's what
No. When whatever the two youngest generations are, I think it's Gen Z, Gen Alpha, when they enter the workforce, that SaaS will completely be dead because they're just going to get rid of those products and just use AI. And that just shows me that they've never worked at a big company before, because they would know that, okay, cool, Gen Z's now in the workforce. Cool. Guess what? They have no say in anything. You think that whatever platform Morgan Stanley is using for their human resources and financials, you think that just because you have 20% of the company that's Gen Z now, they're just going to get rid of SAP? That's not how this works. You need the full C-suite to do something like that. Not to mention all the time to do something like that. I don't think people actually understand how the inner workings of businesses work when it comes to these programs. And they're trying to lump just one little thing in SaaS, where SaaS is so many different things. It's software as a service. It's Salesforce, but it's also Workday. It's also Oracle, PeopleSoft, Paycom, ADP. I mean,
someone says, I work in big tech, and the amount of chatbot requests we are getting in websites causes people to not want to look at charts and spreadsheets. So I would say it's dead.
Charts and spreadsheets have nothing to do with freaking SaaS. Once
But
again,
I think that's a metaphor for like dashboards. And that,
no.
You know what I mean?
Okay, so if you actually go to SAP's website or Workday's website and you actually look at what they do, Amazon is not getting rid of Workday because they can build a chatbot in freaking AI. You need an actual central repository for all of your employees' records, for all their background checks, for all the medical stuff that you have with your medical plan, for all your finances with accounts payable, with accounts receivable, with payroll. There are so many things that you need. Okay, I'm an SAP basis engineer. Is SAP going anywhere because of AI, or is SAP embedded AI to make their product even better? I would say they're probably embedding AI because I know what these companies are doing.
I would say so too.
You can't get rid of these things. Like, you just can't get rid of them if you're running a big company. If you're running a company of 50 or 100 people, you don't have one of these platforms. You're probably still using Intuit and QuickBooks. Like, you just can't get rid of this stuff.
So look, I agree with you high level, but what if there is a world where you could get rid of something? And this is what Chamath said today, which was kind of similar to this argument. So he said, a general comment about software companies: if you look across the software industry, you see record levels of RPO. These are future revenues that are tied to performance obligations. The problem with this is that AI can more easily attack and devour RPO. The more RPO you have, the more you are expected to work to earn it, the more incentive and time you've created for a low-end AI disruptor to do that work for a customer. The point is that any valuation model that incorporates any discounted value of RPO may be on the high side and overestimating. The safest assumption would be to value a software company by valuing their RPO at zero. This may seem ultra conservative, but may be the right margin of safety unless you have a precise sense of the AI capabilities of the foundation model companies in their ecosystem.
Yeah, he's not necessarily wrong in that, because if you have RPO at 300 billion or 100 billion, whatever it is, you don't know if there's going to be a new company that comes out for some specific task that eats away at that RPO. So that's not an incorrect statement.
No, but hold on, but the software companies are primarily valued off the future growth prospects. A lot of that comes from RPO. If we value RPO at zero on the conservative end, these stocks should be down 7% today. Their multiples should compress, right?
I don't know about that. Have you ever seen any of these contracts? They all have annualized kickers. They all have increases per seat when you expand your company.
So I agree, but I'm taking the bear case here. If Claude gets into a hedge fund that was using Workday, Salesforce, yada, yada, and Claude says, hey, we can do this, we can do this, we can do this, we can do it. And before the contract comes up for that hedge fund to re-sign with Workday, and they just automated it with Claude, I mean, That's the foundation
Well,
model, getting the value of it, not the software.
Do me a favor, share my screen. So we're on Workday's website. HR, like Claude, and this is the thing that pissed me off. Claude Code is not building a human capital management system for an enterprise software company. They're not doing your talent management. They're not doing your workforce management. They're not doing your planning, your analytics. They're not doing all this, not doing your payroll. They're not doing your budgeting. They're not doing any of this. Like, there's a reason these companies exist. I mean, there's so much that these platforms do. There's a reason why the big three are Workday, SAP, and Oracle PeopleSoft. Like, big corporations are not getting rid of this. It's just, I think that all these people are wrong. They're looking at this from an AI perspective, that AI can do everything, but they've never actually worked at a large company.
And that's why I default to you, because I haven't either. And I can imagine it's really difficult to just strip out.
When Chris comes in, ask him two questions. Ask him one, because I know that where he works, he's on Oracle PeopleSoft. Ask him if there would be a way for them to get rid of PeopleSoft anytime soon. And then ask him if there's any way for them to get rid of ServiceNow anytime soon. Because I know that they use those two platforms. And I won't say anything. Get his thoughts on that.
Okay, give me a minute. Can you tell us why? Yeah, why are you buying ServiceNow?
I wish that I had the power to share my screen. So I am currently, I wonder if I can't even bring anything up, or I'd bring that thing up. Steve is right. It's the same way when people were complaining about when they wanted to get off of Oracle but couldn't. Yeah, these things are freaking very sticky. They are so sticky. So ServiceNow, I think, is getting very interesting. Amit, can we play something from Mad Money on here from CNBC?
Yeah, just send me the link in the private chat. I'll pull it up.
I have the timestamp on. Hold on.
Okay. By the way, Chris will be here in like 2 minutes.
Ooh, I almost put that in the comment.
Dude, SAP down 15%. I don't know. Like, I don't know much about SAP, but
I don't know why that didn't come up as a link. Hold on.
That's Europe's largest tech company, if I'm not wrong, for SAP. Okay, send me the timestamp and I'll pull it up.
Go to 6 minutes and 23 seconds and play for like 1 minute.
The customers are deserving of. And just to show the shareholders some love, I approved a $5 billion share repurchase and an immediate deployment of $2 billion of that today. So as soon as we can, and the window opens in the next couple of days for us, we'll be in at $2 billion. I also bet my personal comp all on the stock. So I couldn't possibly be more confident of where ServiceNow's entry point is now, how I expect the multiple to re-rate based on results that are 1 of 1. Let's go.
All right, I want to be sure people understand that's an accelerated share repurchase on the $2 billion, meaning it's just going to happen now. So people who really do not like ServiceNow, they can sell it right into you if they want to.
They can do whatever they want, but if I was them, I'd hold. And if for the people that are on the sidelines waiting for the story, Jim, let me explain just a little bit on these M&A moves. I proved beyond a shadow of a doubt, we didn't buy growth,
right.
Okay?
Absolutely.
Knock that one down. I just told you our seats are actually increasing, not decreasing. And our TAM went from 90 to 600 billion since 2019, since I've been CEO. And I just re-upped for 2030, just saying that I have enormous faith and conviction in this business. But I also did some important tuck-ins. And you say, Bill, you asked me the last time we talked, why did you do that? Because you're a builder. Well, what happened was we waited some time to get MoveWorks in as it went through the process. And now we have an agentic AI user experience, that open door where you can search, get your requests met from any data source and have a great experience, and all the actions are taken on ServiceNow. And then we went into 2 very critical areas for the customer. One of them, which is super important, is security.
Okay.
Jim, cybercrime is forecast to cost the world $1 trillion a month. So if that was an economy, it would be third, only behind U.S. and China.
Okay.
Huge problem. So what do customers need? They need visibility and prioritization. They have to reduce their exposure before incidents happen.
Okay.
Real-time agentless discovery and classification of every asset. IT, OT, medical devices, industrial controllers, the whole 9 yards. Armis does that.
Okay.
So that's added to our great security business that's already growing 100% year over year.
We are going to have to
I like what he's doing with the comp.
And he took his salary in stock now, no more cash.
I do have a nice little headline for you.
Okay.
Trump, because Canada has wrongfully and illegally refused to certify the Gulfstream jets in their country, I'm going to charge Canada a 50% tariff on any and old aircraft sold into the United States of America.
Okay. Cool.
Having said that, I think someone's here. I'll be back in like a minute.
Well, I don't know. You guys certainly think that Christopher Walken should play him in a movie, and I second that. I am with that. I think that would be hilarious. But ServiceNow is certainly a very interesting company. Yeah, listen, Sachin Master. At Stephen Fiorillo, software companies provide default products, but every company uses them differently based on its own requirements. AI won't fully replace these products. It can only help improve them. Yeah, I agree. I absolutely agree. I think this whole SaaS thing is overdone. Look who it is.
He's here. You got to move in.
What up? Woo!
You know what he said? First thing he said when he came? He's like, it's cold. I'm like, bro, you used to live here. What do you mean?
Yeah, he lives in the South now.
Yeah, man. Look at this guy set up. He's actually a professional streamer. He's got like he's got an iPad with the live stream. Bro, I don't even have a clean setup like this.
Oh, we're here.
I'm gonna take I gotta take this down, bro. This is nice. I like it.
Dude, you want to move back to New York?
No, I'm good.
You could be here every week. We could play poker. You, me, and Steve could get steak every other week. Like,
don't tempt me, dude. Don't tempt me. I love the city, but bro, I can't be at the caliphate anymore. You know, I'm tired of paying those 14-15% state taxes. Can't do it anymore, man. Yeah.
All right, so we got 20 minutes with Chris, then we'll end it out today. Everyone has been asking, what does Chris think about Meta?
Well, I was bullish. And when you're bullish, you gotta lean into it. And I leaned into it, and it paid off. I actually was able to milk Meta a couple of times.
I'm moving a little
this way.
Yeah, perfect.
Yeah, I was able to milk it a couple of times because when it dipped, I was able to buy back my I was able to buy back my calls that I sold the 900 ones, and now they're just running naked. So eventually, I'm planning on selling either the 900 or the $1,000 calls against it with the same strike.
Yeah.
And then probably buy more Amazon. Because I think, to me, when I looked at the information from Meta and just how people are rotating from higher valuation to the catch-up trade in AI, you're going to see that happen with Amazon. So I think it's going to be crazy to see like the run in Amazon right after this. The only thing that gets me a little bit worried is that there's rumors that I was watching. I was like, "What? Amazon's going to put $50 billion in OpenAI? The hell, you know?" Because OpenAI's got a little bit of a stench to it.
Steve, I don't know if you heard that. Amazon's thinking of $50 billion to OpenAI.
Yeah, it's pretty insane, dude.
I mean, I'm not surprised they want to freaking hedge their bets. They already own 20% of Anthropic or whatever it is. Why not invest in OpenAI also?
Or they want OpenAI to give them $50 billion back in compute.
Yeah. I mean, the round tripping is real. The round tripping is real. But at the end of the day, if it benefits the company, why not, right? Because the amount of money that Amazon has put into Anthropic is probably like 5x on them.
Yeah.
You know, so when you think about it from a shareholder perspective, it's amazing, and you don't want to be left behind either. So I think it's a good move on Amazon's part to keep throwing the money where they need to. The other thing is, I don't know if you have fiscal AI here, but if you look at the the margins for Amazon, you go back 6 years, their
Way better.
margins
Yeah,
have been creeping higher and higher and higher. And they're at net profit margins right now of about 11%, which doesn't seem like a lot. But when you think about Amazon about to hit almost $1 trillion in revenue, it's pretty big. And then, and all the new business lines that they have, they're all much, much higher margin. Third-party seller network is high margin. Advertising is super high margin. And then you can do AI-related targeting with ads. So that's another thing. You've got AWS, which has been their grower, and that's probably going to reaccelerate now because of all the stuff that's going on with AI compute. And they've got all these relationships with the enterprise already. So I mean, they're like one of the best companies positioned to take advantage of the current market in AI.
So for Meta, to catch people up, you bought, when the stock was 600, you basically bought leaps.
Yeah.
The stock ran up, I think, to almost 700.
Yep.
You sold calls against the leaps. So
Correct.
you collect premium from selling the short call against the long call.
Yep.
Then the stock tanks, which means the value of the short call goes up, the value of the long call goes down.
Yep.
You buy back the short calls.
Yep.
Then you run the stock back up,
Yep.
and now you have the potential to sell short calls against it.
Exactly. And that's the thing when it comes to this market with the president, being as crazy with his tweets, it actually just makes a lot of sense to play the volatility, So when volatility starts spiking, just take advantage of it. And when volatility goes down, take advantage of that. So right now we're seeing that with a lot of different industries where a tweet can make things go up and make things go down. And because of that volatility, you get these crazy premiums when you sell things. So yeah, it's good times, man.
Well, you and Steve pounded the table on Meta, so I'm happy for that.
Yeah.
Steve, you feel the same about Amazon? I think Chris is getting pretty bullish for options on that one. Do you think that one's the next to hit 300?
Yeah, I think it breaks out this year. I just don't know when. I mean, Amazon is a sleeping giant at this point. It deserves to be higher, and it may have the second or third most alpha to be unlocked in the Mag 7 over the next several years.
Yeah. So a couple of points about Amazon that I think the market is underappreciating. Number one is their chips division, right? So they have their own training chips that they have, but they also have their own inferencing chips like Trainium and Inferentia. And they're supposedly really, really value accretive to them compared to just buying from AMD and buying from NVIDIA, right? You're basically not giving away a crap ton of margin. So by being able to have this ecosystem that you control the supply chain, you control the profitability, you control pretty much everything that goes into it, and you can tailor it to what you want it to be. So once again, right now the amount of demand out there for AI compute is insatiable, right?
Yeah.
You can clearly see that from Microsoft in their Azure numbers that, they were able to put up so much in RPO. Amazon is, the largest cloud out there. It's more than likely that they're going to end up hitting very similar RPOs. The difference between Microsoft and Amazon is that Microsoft was valued like this. Amazon is valued like that relative to its true potential going forward. So I think right now, Amazon is probably I think Meta is undervalued relative to where they should be.
Do you have any
going.
thoughts on selling Meta here or no?
No, I wouldn't sell Meta. The only risk with Meta is that right now, everyone, especially if you're trying to analyze this, they're basically using up all of their operating cash to invest in this data center play, right? So what's going to happen from that? That means that there's less money available for buybacks unless Zuck starts taking on debt, right? Now, the problem is when you take on debt, that's something that you got to deal with later on. And so I don't know how Meta wants to play the leverage game. The thing that they have been able to do with Blue Owl and all of these guys is that, think about the GPUs, you can depreciate them. And because of the big, beautiful bill, you can do something called immediate expensing, right? So when you buy a GPU, you can basically write it off right away. So you can't do that with the physical building and the assets like, the transformers and the grid and, all the other parts of the data center. So what they did is made a deal with Blue Owl where Blue Owl would finance all the long-term depreciating assets.
Yep.
These guys would be able to buy all these GPUs and depreciate them right away. So it's almost like they're controlling their taxes. So last time their tax bill was high, so everyone kind of got freaked out.
Yep.
But going forward, their tax bill is probably going to be like 12%. And so for a company that big, 12% in taxes is a huge savings. So right now, Meta is playing this game of, you know, how to maximize its taxes, but at the same time also keep investing in AI. And Google, and Amazon is going to do very similar things, you know. So
okay, last question for you, then we'll end it. Steve and I were talking about this death of software argument. How much do you buy into the fact that ServiceNow, Workday, Salesforce will be commoditized?
So this is where people are throwing out the great companies with the bad ones, right? There are certain companies that have a much, much higher chance of getting, I don't even want to call it disrupted, because it's probably not the way to go. It's probably like their growth prospects are going to be hindered significantly, and their margins are going to be hindered significantly, because there's probably going to be alternatives out there. So, you know, if you are like the only one doing something in SaaS, you can kind of demand a premium, right? You could say, hey, listen, you're going to pay me X amount of dollars no matter what, because I'm the only one that provides you that service. And the problem is now other companies, if they're able to leverage AI and create at least somewhat similar
Steve's
things.
argument is that's not going to happen for ServiceNow.
Well, see, that's the thing,
Salesforce.
and I agree with Steve. So some of them are definitely not going to have that problem. Like ServiceNow, the amount of investment it takes to get ServiceNow onboarded into any organization is immense. But that also means that you have to spend a lot of money to get off of them and spend a lot of money to get them on. So here's an example. My organization, we use ServiceNow for all of our ticketing, all of our pretty much all of our enterprise related ticketing systems. Now, let's say they decided, hey, listen, there's a cheaper option out there. Let's go with them. For the first thing you have to do is retrain every single person in my organization. Second, you need to get all these people to implement everything. And it's not like implementation takes sometimes years. So
and millions of dollars in consultants a lot of times also, because you don't have the internal assets to backfill positions.
Exactly. And then there's also a ton of legacy data that's sitting on one system. Not all of it crosses over, right? And so people, they have to really weigh like, oh, am I really going to spend, you know, millions of dollars to switch to something that may or may not work? And the other problem is, let's say you do have a company that designs all the stuff that ServiceNow does utilizing AI. You know, when it comes to these products, it's not just about creating the app. It's also about maintaining it, supporting it from a cybersecurity standpoint, making sure that you're constantly giving it updates. And if you have a software program that's built by AI and you have a lot of coders that have been utilizing AI, that leaves a lot of gap between what is possible, and you might end up with a lot more vulnerabilities. You also have to hire a bunch of people to do sales. You also have to do a bunch of marketing. So to get all of that in there, it's very, very difficult for a new person to come in. And remember, ServiceNow is going to be using AI too. Yeah. So it's not like they're like, okay, yeah, we're not using AI. We're just going to do a traditional route. So they're logically going to actually accelerate faster in developing programs at a much, much cheaper price than they used to. Right?
But you would still buy like a Amazon or Meta over a Salesforce and Adobe.
So for now, I think the way that you want to play this is by being in something like Amazon, where you know that they're a direct beneficiary of AI.
Yeah, from the infrastructure side.
Right. Let the market realize and figure out where the bottom in SaaS is. Right. Once the market has figured that out, we have plenty of time to climb that wall of worry. Yeah. Right. Right now, by getting into the SaaS market while everyone is selling it, I mean, there's probably some alpha in dollar cost averaging your way into it, but I just think that there hasn't necessarily been a bottom yet. And even from a valuation standpoint, ServiceNow looks cheap relative to its history. The problem is they're at the point where their size is big. So it's really hard for them to kind of like grow at the same pace that they were growing, let's say 3 years ago. So their growth rate went from like 40% and projected now to do 20%. Now, any other business, if you're growing consistently 20% year over year, and you're doing it for a good amount of time, that deserves a really strong multiple. But right now, if you look at it, the multiple on ServiceNow is still relatively high, considering that their growth is slowing down. So, but the two things that we have to kind of consider here is, number one, let the multiple compress to the point where it's gone from
becomes deep value.
Yeah, well, I wouldn't say deep value, but at least value. So it's gone. You have to wait for it to go from growth to value, and then after that, you kind of have to wait until the sentiment around the industry changes, right? And look, that might take 6 months, a year, whatever. So what do you want to do? You want to sit on dead money for 6 months while this entire revolution is happening on the other end where everyone is accelerating? No, you want to kind of push in the side where things are working and then utilize that money eventually to then redeploy it back into service now at some point.
Yeah.
Chris, let me ask you this. You guys have tens of thousands of people that work at your organization. I know you guys are on this very specific ERP system. I'm not going to say which one, but if you want to say, obviously you can. What the hell is the probability of leaving the ERP that you're on for some AI homegrown thing?
It's next to impossible. I mean, we're too big. The amount of money it would take to transition would be too much for the company to do. I mean, dude, the growing pains we had to go through when we first implemented everything was a pain in the butt. Yeah. So there's no way we're like, oh yeah, let's sign up for that right again. Like, nah, bro.
People don't realize how entrenched HR departments are, how entrenched finance departments are, payroll, accounts payable, accounts receivable, talent and learning, your contract management. People don't realize, unless they actually work at a big company and use these products, how impossible it is to really switch. And the cool tagline of AI is coming for SaaS. These people don't work at big companies. They don't understand how it works.
Well, here's the thing: if your SaaS program is directly related to consumers, it's probably easier to get disrupted. But if you're in the enterprise level, I think you're pretty safe. If let's say if you're working with consumers can switch at any time. Like Amit can switch out. Like let's say he uses Adobe, right? Adobe, whatever, right? He can
go
switch.
to Canva instead of Adobe. That's an easy switch. 1, 2, 3.
Right, but Salesforce is really hard to do. Your entire CRM backlog is
I'm talking about your freaking SAPs, your Workdays, your Oracle PeopleSoft, your Microsoft Dynamics.
You think 10% down on Microsoft? You think that's a dip you have to buy?
I don't think so. Like I said, there's better plays out there. The sentiment, like right now, because of OpenAI, Microsoft is in the penalty box.
Yeah.
So everyone is saying like, oh my God, look, like OpenAI is losing all of this market share to Gemini and to Anthropic. And Microsoft has committed so much money and resources to OpenAI, and OpenAI's valuation is crazy. So people are saying, wait a second. So why should we trust Sam? So here's the thing. If Sam comes out and shows like some crazy revolutionary product that just blows everyone away, then hey, Microsoft will get a reacceleration.
Do you think he will?
I don't know. But
yes or no? Do you think he will?
I don't know, man.
Steve, do you think Sam will have some revolutionary product in AI?
Who knows? I mean, ChatGPT is pretty revolutionary, and they but I'm just saying they pioneered the space. So could they be coming out with something else? Who knows?
Can switch LLMs. That's what I'm saying. That's why I think they're working on this physical hardware AI stuff, and I think it's going to be a flop.
I don't know.
Like, I don't think headphones.
I mean,
AI.
The one thing I'll tell you is, look, these big companies, they're allocating a lot of capital. That means that Sam Altman has at least shown them something to get them to put in. Like, okay, like I could understand like. So what's his name? Mayoshi-san being duped because he got duped by the WeWork guy, right? Yes. So sometimes he gets a little too excited. So when he puts in money, it's like whatever. But dude, Andy Jassy and Bezos, they're not the type that just throw money. And Jensen, they're not the type that's like, oh yeah, let me throw money at the situation and basically have no ROI. So to some degree, they see something in OpenAI that makes them bullish as hell. To say that whatever money we're spending on them is going to give us a better return than had we just bought back our own shares. Because every calculation has to be looked at it from that angle. Does it make sense to put money in Anthropic or just buy back our own shares? And right now, it makes more sense to put it in Anthropic because they just have so much growth potential ahead of them. And like I said, everywhere you look, people are using Claude. I started using Claude. I think it's great.
I'm going to actually pay for it. I want to use it. Amit, can I play something without sound from X for 20 seconds? Is that going to screw anything up?
Oh, shit. No, you're good.
Share my screen. My dream is coming true. I should just buy back into Tesla. You ready for this? This is the greatest promo I've ever seen for this shit.
Grandma.
This is the greatest promo.
You know, this is not from Tesla, right? This is AI.
I know. I'm aware.
Yeah, I mean, look, this is the biggest use case for Optimus. I agree.
This is the biggest. I'm telling you, this is one of the biggest use cases. People are not thinking about how beneficial this could be for the aging population as a whole nother vertical besides a helper around the house. There's going to be so much that this does,
Like especially sex robots, because that's where it's headed, bro.
No, I thought you were going to say Terminators, but you know.
Well, first it's the sex robots, and then it comes the Terminators. Because
Terminator stuff is scary, but I think we're far away from it. But it is a possibility. By the way, Trump Senate funding deal, I mean, that should be bullish, even though the vote got rejected, that we shouldn't get a shutdown.
What is it? What do they want to do? The Democrats
They're
want like to remove ICE?
Yeah, but they're separating the DHS funding from this package,
Mhm.
but so they'll still fund the DHS. It'll just be
separate.
Yeah, for a couple of weeks, which would be.
I think the question is, what about the Democrats and their subsidies? That was the other thing.
And that's the other question. IBM just raised $8 billion in bonds. IBM stock flat after hours. Strong
We're
demand
so
level.
dumb for not buying this when I didn't buy it and I said we should have. We're so dumb.
Okay, Chris, are we buying Micron? Everyone just takes a big sigh when the chat collectively probably took a sigh when I asked an hour ago. You saw Sandisk's earnings? They crushed,
bro.
Hey, Micron's only a 13 PE. Let me say that again, a 13 PE. And since August 1st, it's gone from 104 to 435.
It's insane. Well, the thing is, like, the reason why people didn't value it so much is because if you look at Micron and pretty much memory in itself, it's a cyclical business where you have these cycles where there's so much.
But what if the
demand.
cycles just?
Well, that's
you know?
the thing. I don't know, man. I don't know if
Just buy more NVIDIA at this point.
But we're reading these earnings calls. Like, we can't say the cycle's ending tomorrow or even next year, right? So it's just a question: is it priced in already? But it reminds me of NVIDIA at 400 billion market cap in May of 2023. They just kept beating and raising. I don't know if Micron can keep doing that.
But the difference between them is that there is no competition with NVIDIA.
Correct.
NVIDIA, I mean, and there are competitions now with TPUs, but NVIDIA controls the lion's share. Micron has competition from SK Hynix and Samsung, and probably, and this is what I've just been hearing, like some Chinese companies have started to make RAM as well.
Mhm.
So, you know, RAM does not necessarily have the significant moat that that GPUs has, as far as I know. But once again, I'm going to say the same thing I did last week. I am not an expert in semiconductors, and every time I've tried to become an expert, I've been wrong. So I would just rely on someone like Jose. So if Jose says, "Hey, listen, Micron, there's something there," by all means, listen to him. Don't listen to
Even
me.
Jose, I think, is scared of the cyclicality, if I'm not wrong.
Yeah,
That's a fair point. All right, folks. That is it for us today. Steve will be live later. I'm linking his YouTube right here. For those that are coming to the New York City meetup, I will see you on Sunday. I know there's going to be a little bit of snow, but I don't think it's going to be anything like last week. So looking forward to seeing everybody here. Chris and Steve will be at the meetups. That's why Chris flew out. And Chris's ex, I will be linking right here as well. Can you just tell everyone the bricks are real?
The bricks are definitely realish.
Told you.
Realish.
Everyone who comes here acknowledges the bricks are real, you know? So there you go. All right. Thank you, everybody. Apple crushed it. Hopefully the big tech earnings can continue. We have Amazon and who else next week? No, just
Google.
Amazon. Oh, and Google.
Palantir. How can you forget Palantir?
I was thinking big tech. I was thinking big tech.
Palantir's a $400 billion company. That's big tech, baby.
Max 7, but yes, you're right.
The question is Palantir going to go down to the 50s? That's the question, because they are
I
assassinating.
don't know about that, but I could see it going past 100.
Okay.
I think Carp's got to put up some big numbers to get the whole SaaS dead center, because Palantir's not SaaS. They I mean, they are SaaS, but they've shown how much AI. But they've shown how much AI is a tailwind, which the other companies haven't. But they have a very high multiple compared to the other companies.
And very high expectations, because their revenue growth last year was 100%, right? So now you're comping against one of the strongest years ever. So now you have to get to the point where like 60% growth is going to disappoint. So anything below 60, it's going to be bad. And at the same time, you've got like bad sentiment on the SaaS part. So like I said, this is where you just have to be very careful.
There's a big plus and a big minus. The big minus is rates are coming down, so all that cash is producing less income. The big plus, tremendous amount of deals that net dollar retention's not figured into it yet. So the growth rates may be incredible this year and next year. The question is it enough to keep this going? We'll see.
Yes, we have AMD next week as well. So we got a bunch of earnings next week, and we'll be covering all that as well. All right. Thank you, everybody. I'll be live tomorrow morning. We got, Steve, are we doing SoFi together? 7:20, 7:25?
No. I mean, I'm running around all morning tomorrow. Then I got to meet you guys. So.
All right. So I'll be doing SoFi tomorrow. I'll be live at like 7:25, and we'll keep going from there. All right. Thank you, everybody. Appreciate it. We'll see you guys
later
tomorrow. Bye, everyone.
Later.